All right. Hello, everybody. Welcome back to another episode of the Market Close. UPS man is on time to deliver your news. Actually, a little bit early, to be honest. We're here. We're live. We got 3 earnings today to talk about. We have Intel, we have Intuitive Surgical, and we have Capital One. So we got a bunch of different earnings to get into, and then we will be having Macro Thursday with Kris at around 4:30. But we have a ton of earnings. We're going to look into what happens with these earnings. We got one financial that we'll be reporting. We have one semiconductor name in Intel, which is already up 47% year to date. And then we have Intuitive Surgical, which is more of a robotics play. So definitely a diverse set of different companies today that we'll be looking at. And we will be going through all those earnings. Now, a couple of things have happened since the market opened. One of the main things is that we're getting a little bit of an ugly close. Now, not ugly in the shape of it being red, but it's just not as green as it could have been. S&P 500 right there, 688. We were at 691 in the morning, so we are down a little bit from those highs. 688.40, that's up 0.4%, which is not bad, but it's also not like an explosive move. Now, individual stocks today have had a pretty big move. Grab up 2.6%. Rocket Lab, it's basically flat, but it was down to 82. So the fact that it came from 82 to 87, that's very nice to see, even after the Neutron delay that was announced yesterday. Lemonade, massive day. Even Elon gave them a shout out at his Davos speech today, saying that this is why FSD continues to be one of the better products that is out there because of how insurers are going to be thinking about it in the future. That stock up 13%. And then speaking of Tesla 447. Took a while for Tesla to come back. I mean, this thing was at 415 2 days ago. Now, you might be wondering, why was Tesla up today? It wasn't just Elon being at Davos. It was a report that came out, not fully confirmed, but I think it's basically confirmed. Tesla begins robo-taxi rides in Austin without the safety monitor. And in fact, we do have a video, I think, by Sawyer showing this. Yeah, here it is right there. Someone in Austin, there's the video. I'm in a robo-taxi without a safety monitor. So very cool. I mean, it's happening. Waymo expanded to Miami today. Self-driving continues to be a big thing. FSD, based on how I've experienced it, one of the best ways to experience the physical manifestation and real-world application of AI. And it seems like Elon confirmed. Okay, there you go. So that is officially happening. And I think that's what sent Tesla flying today. 3.84%, 447, almost broke through 450, but got rejected at these levels. 447.95, up 4%. Nvidia, she tried, got to 186, could not break through. Nebius 97, that went right on the day. Enphase, massive day. Elon was talking a lot about solar panels. Still not fully sold on the whole solar panel thesis in this administration, but maybe there's some more due diligence to be done. I think there's a lot of energy plays, and Enphase and the solar names are catching a bid. Amazon right there, 234, down from 235, but still green on the day. Upseller was up 8%, Ondas up 0.2%. A lot of names were flat. The rare earth names had a great day. USAR up 16, MP up 6, Critical Metals Corp, CRML, that's up 22. I think the Metals Corporation or the Metals Company, TMC, yep, that's up 3%, although it is down from its highs. Netflix down 2.4%. Amcor peaked in the morning, then came down 52.59. Overall, a decent day. It just wasn't a massive explosive day that we could have gotten after the pivot from Trump on Greenland yesterday. But I don't think anyone can complain given some of this momentum. However, large caps continue to suffer. Broadcom right there down 1.4%. This one in particular is just not being able to catch a bid. D-Wave right there up 5%. Now, one of the names that really had a great day was Meta, 646. The stock was 600 2 days ago. Why? I think outside of the analyst upgrades they got this morning, the number one reason is that Threads is now getting ready to monetize. So where you have 400 million people using it monthly, and then the overall sentiment around Meta maybe be shifting a little bit, it's kind of hard to say if sentiment shifts given how volatile the stock is. If it goes 5% down, it can be back at 610 tomorrow. But you have layoff in Reality Labs, you have a new compute business, you have multiple analyst upgrades, you have Threads monetization, and a relatively depressed multiple. That should be enough, hopefully, to get Meta into the swing of things. They will have earnings with Tessie on Wednesday next week. And so that'll be a big week. We also have Jay Powell in the FOMC that morning as well. 116.58 on ASTS. This one was almost falling below 100 this morning. 116, that's up 12%. Again, Rocket Lab, ASTS, look at Rocket Lab at 88. These space names just have a lot of strength, a lot of momentum, and it's hard to kind of let them fall down. Navitas, was this one red today? This one, no, up 15%. This one, again, it's a bit speculative, but they did have a deal with NVIDIA. That was in November. That's what really got the stock to go from 7 to 17. I don't see a particular headline today. I still don't know why ANET gapped up. Arista, that's still up. Yeah, it's up 8.4% on the day. And then Reddit took a bit of a hit a couple days ago. That one's up about 1%. AMD got a lot of love this week, 253 right there. I think it's going to be the highest close in a couple of weeks now. Another $270 upgrade for AMD. Continues to get momentum. There was a headline a couple days ago that Meta was ditching some of their ASIC efforts to just focus on buying more AMD chips and integrating that into their data centers. And that might be another reason why Meta is getting some love. I still also don't know why Celestica got hit as bad as it got hit. So ANET and Celestica both went the opposite directions, but not sure exactly why. Zeta, I think this was at 2150. Yep, 2156. Nice day for that, 5.4%. I really do think Zeta after earnings is closer to $28, $30. Like if they deliver the earnings, I think they can deliver. I think this one gaps up, but it is still a bit more speculative as it is a small cap, and we're gonna have to see if this one has the momentum to play out. Robinhood right there, 106. Robinhood continues to be flat, and Palantir continues to be flat as well. Palantir did get an analyst upgrade today to $208. That one was not enough to give it a bigger move. Triple V, thank you for the $200 super chat. Appreciate you being here, sir. Thank you for watching the show. Thank you for being part of the community, and thank you again for the $200 super chat. I'm going to put a poll right here in the chat, and this poll is going to be, which one do you think outperforms? Also, do we gamble on Intel, guys? Gamble on Intel. Do we do an Intel gamble? Which one outperforms? We have Intel, we have ISRG, and then we have Capital One. Do we do it? Because the problem is we know it's going to dump. It's going to dump. Intel will dump. But what if it doesn't? What if it goes up? It's not crazy to say it goes up, but it's going to dump. Like it's up 40% in a month. We know it's going to dump. But what if it doesn't? What if it what if it, this is like, I have not looked at any TA. I barely know the market cap of Intel. I don't know what the valuation looks like. All I know is that this would be a full-on gamble if we play Intel. Like literally a gamble. That's my brain all day. Yep, that's all of our brains all day. OSS as well, down about 2% right here, as this one went a little higher. Do we do it? It'll be 100 shares. It'll be $5,000. If not, we're bag holding $5,000 of Intel. If it gaps up to like 57, 58, we'll sell it. We'll make a couple $100. It's going to go down, bro. Like we know it's going to tank. Like there's no way this thing goes from 47% up year to date to like 57%. Like, but what if it does? Like what if it actually pulls it off? A little bit of coverage on Intel right here. We got 8 minutes. All right, this will be a game time decision. This will be Amit wants to be a community member. I might become one if we take this.
Oh, no doubt. Of course, President Trump helps with that, as well as some other lifelines. But Intel's earnings report will show whether strong demand can really translate into strong guidance or if supply constraints just get in the way. The stock is up, 47% just in the last 3 months, fueled by optimism around Intel's new 18A, its more advanced manufacturing process. And of course, major backing from the Trump administration, investing $9 billion. SoftBank, NVIDIA took a $5 billion stake. But underneath that bullish sentiment is a problem. Intel is seeing its best server demand in years as agentic AI drives a boom in traditional CPUs. The company's newest server chips are nearly sold out through 2026, but the catch is Intel is hitting peak supply shortages right now. Most production is on older nodes, manufacturing processes where it won't add capacity, so Intel has demand it can't meet. Management is prioritizing servers over PCs, walking away from low-end PCs, and that helps margins, but it means leaving revenue on the table. Expectations are for strong server demand and potential upside from new processors, but the supply crunch could cap Q1 guidance, Scott.
All right, Christina, thanks for that. Now to Stacey Rask.
What do we do? Do we play it? Do we say screw it? It's 100 shares. Not too crazy, right? It's not that crazy. But it's going to dump, dude. It's up 47%. Google right there, 330. Mercado Libre, great day as well. That's up 4%. Even PayPal, they had an acquisition today, and that's up as well. All right, if I do it, no one follow me, dude. This is absolutely a gamble. I do not care about Intel other than I should have bought it at 37. Screw it. I'm doing it. We're in 100 shares, 54.24. 54.24. I'm in. We did it. Now earnings is going to be fun. Now we are going to see it. Do not follow me on. I am totally ready to bag hold this thing because that's probably what's going to happen, dude. Why is this stock? It's up 40% this year. It's up basically 50%. It's not going higher. But what if it does? If it does, we're going to make some money. All right, so we're in. Now, I'm not doing this with ISRG. This one I genuinely know nothing about. $525. That one, this one had a good year last year. ISRG stock year to date is down 7%. And then Capital One, I mean, I don't know what they're going to say about the credit card rate stuff because that stuff is still important for them. Year to date, that's down 5%. Over the past year, that's up 17%. All right, we're in Intel. We're in it. Again, no one follow me. This thing, it's going to dump, bro. It's going to dump. Like 90% it's going to dump, but there is a 10% chance this thing, they put out some stupid number and they get a quote from Trump or some shit and it takes it out. What's even the expectation? Let's pull it up. We got 5 minutes. I think we get Intel pretty quickly. Intel Street wants 8 cents of profit and 13.39 billion of revenue. Okay, so if the CEO can give us more than 8 cents, that would be nice. For Intuitive Surgical, let me know in the chat, by the way, who has any of these names. Intuitive Surgical, 227 of EPS, 2.76 billion of revenue. And then I don't have the Capital One expectations. I'll get that up in a second, but those are the expectations for Intuitive Surgical. Capital One, I'm assuming the street just wants some freaking clarity on what the heck's happening with these credit card rates. Now, before we get into earnings, which are going to be happening again in 4 minutes, I want to show you guys a stat that just came across 5 minutes ago. I think retail's collective pronouns. I'm never following a UPS driver on financial moves. This is crazy. This is going to be so bad, bro. This thing's going to tank. But what if it doesn't? Retail's collective pronouns are buy the dip. Take a listen to this. Individual investors net bought 1.8 billion of the S&P 500 yesterday. The largest daily purchase since October. This was the third largest inflow since the April 2025 market recovery. Year to date, retail purchases have exceeded $1 billion every single day. Just yesterday alone, it was 1.8 billion of the S&P 500. For the week ending January 14th, individual investors purchased 12 billion worth of stocks, the largest weekly inflow in at least 3 months. This includes 4.9 billion in single stocks, not just ETFs, the highest in 9 months. I mean, this is kind of crazy, bro. The S&P has a negative 2% day, and then boom, retail comes in flying. And it wasn't even on the 2% day. It was on the recovery from the 2% day based on the Trump pivot from Greenland. So, I mean, it kind of was buying into strength more than it was buying into the dip. But the point is, retail has a risk appetite that is so strong. This is kind of why I'm very much doubting this idea that there's going to be this massive 20% drawdown, because every time you have some drawdown, you have even a hint of good news, unless there is some cataclysmic macro event that really takes things down. Retail comes in and they buy the dip. And quite frankly, over the past 3 years, you cannot blame them because all of us have been rewarded for buying the dip. Now, are valuations aggressive? You know, are certain stocks kind of flying like there's no limit? Yes, but a lot of those names are in the right narrative. A lot of those names are in the right theme, and a lot of those names have the right catalyst coming up. That doesn't mean they can't get split in half, just like in Intel, which I think is going to tank today. But, you know, when you have the right things that are going behind it, like Trump and Jensen being in it, when you have CPU demand that's ramping up, those are catalysts that are important, and there's money that needs to be allocated. Also, if people are getting out of treasuries, people are getting out of the dollar, then they want to put it into other assets. That explains why gold and silver are doing so well. By the way, gold and silver, once again, silver passing $96, a new all-time high today. Gold, I'm looking at it right now. I haven't looked at gold in a couple hours. 4,900, folks. This thing's going to hit 5,000. Like, this thing is going to hit 5,000. You had JP Morgan and Goldman Sachs calling for 5,000 by the end of the summer. That might happen before the end of the month. So it is quite incredible the way money is rotating. But yeah, 97 at one point we had for silver today. But that money rotating might be pretty damn good for the equity markets as more people want to bet on stocks. All right, here we go. Let's see what we get with Intel. Let's see what happens. It always makes earnings more fun when you have some money on the line. Again, if we bag hold, we bag hold. It is what it is. It's a pure gamble. Admit you better deliver on this. I will try to be a UPS driver and deliver. But I'm literally doing this at a pure, like, there's nothing fundamental or technical about Intel. This is like literally a gamble, and I think it's going to go down. But if it doesn't, maybe we'll make some money. So I'm selling it too. If we see like 57, 58, I'm taking the money. So I'll let you guys know if we sell. All right, here we go. Thursday, January 22nd, 4 p.m. We got some earnings, and then we'll have Kris for Macro Thursday. Thank you, everybody, for being here. The stock market is now closed. All right, markets are closed. S&P 500, where did we end? 688.93, up about 0.5% on the day. Can't be too mad about that. At least you're getting some momentum on the S&P after a rough couple days based on the Greenland stuff. Rocket Lab, great recovery, 87.98. ASTS, 116.37. Meta, 647.63. Meta had one of the best days for big tech. Robinhood, 106.25. Palantir, 165.90. Shift4 was up a little bit on the day. Novo was up 5%, not too bad. ARM was up 4.6%. Google was up 0.5%. Zeta was up 5.9%. Celestica was down. ANET was up, and then AMD 1.57. I think NVIDIA got a 184.30 close, 184.73. Actually, not that bad. 184.84. That one's actually up after hours. Okay, Intel goes down. What did I say? What did I say? What did I say? 6% down. There you go. We don't even have the earnings yet. Let's see. What do they put up? See, it's going to be hard for it to reverse from 6%. That's already pretty ugly. Usually that type of a candle. That was immediate too, right? That was like, that's why I said don't follow me. This is going down. Intel, let's see what the numbers are. They beat on revenue. They missed on guidance. They beat on revenue. They missed on guidance. Intel down 4%. Wow, though. Hold on. This is a pretty heavy beat. I get the stock is down, but 88% beat on EPS? 15 cents versus 8 cents? Are you kidding me? Unless that's some accounting mumbo jumbo, that's a hell of a beat. That's not a bad beat. Revenue, $13.39 billion versus $13.6. They beat by 2% on revenue. EPS is up 15% year over year, beat by 88%. Those are not bad numbers. I would imagine the guidance has to be what's killing them here. Let me pull up the guidance. There's a little bit of a green candle trying to recover. Dude, that's an 88%. I don't care how crappy of a company they are. To beat earnings, to beat expectations from all the fancy people on Wall Street that already know what's going to happen before it's going to happen by 88%. That's not the worst thing. Let's get some coverage on Intel, and then we'll get into their guidance and see what's going on there.
Intel earnings, they have just crossed the wires. Christina Parts-Neville's got the numbers here. Christina.
Yeah, what we're seeing is a beating expectations for the fifth consecutive quarter, driven by AI spending in both PCs and data centers. So revenue hit $13.7 billion, with data center and AI revenue up 9% year over year, while cloud computing revenue actually declined 7%. The company is guiding first quarter revenue to a range of $11.7 billion to $12.7 billion. So that's below Wall Street expectations. The reason for that, supply constraints. They raised concerns about that last quarter. Same issue again. CFO Dave Zizner told me just in the last hour, we were chatting on the phone, that Intel ran out of the inventory buffer it had been using to meet demand, and the company will be, quote, leaving quite a bit on the table in Q1. Intel is seeing strong server demand as AI workloads evolve. Zizner also said as the industry moves from training to inference and agentic AI, the CPU to GPU ratio is actually increasing, which is fascinating because we talk about GPUs all the time, and that's driving a big refresh cycle for traditional data center infrastructure. Intel expects the PC market, though, to decline year over year due to rising memory costs. But Zizner, the CFO, called it a, quote, high-class problem. I wrote that in very big letters here. The company needs those wafers for data center customers where demand is just surging. And lastly, on the foundry front, Intel is seeing active engagement for its 14A process node, which is the more advanced one, with opportunities likely to turn into wins. And this is what he said, in the second half of this year or the first half of 2027. But CEO Lip-Bu is holding back on major capital spending for that particular advanced node. Zizner said, quote, right now, Lip-Bu is holding them back until we get customers. Once we get them, we're going to need to start really spending on 14A. So that a big point there is that they're not going to announce any customers on the call, but they did say they're going to be spending on tools and equipment as well. So a lot from that call, and you can see shares dropping almost 5% right now.
If anything, this seems pretty bullish for AMD, to be honest. So, I mean, Yeah, the guidance for Q1 is a little less than expected. CEO kind of making the argument that demand is there, but they're going to have to reorganize some of their logistics in order to be able to achieve the types of demand or the capitalization of the demand that they want to do. Also, the stock was up 50% year to date, so I understand why it's taking a bit of a breather. So for anyone who followed me into the 100 shares, welcome to the Intel community. We are down $200. And we are now community members. AMD right there, that's down a little bit after hours. Zeta's down a little bit. NVIDIA, that also is down a little bit. I don't have Intuitive Surgical earnings, but that's down 1.43%. We're going to see if we get those earnings in a second. And then Capital One, I don't have the earnings yet, but they just announced they're buying a company. They're buying Brex for $5 billion in cash. Brex, I know these guys. This is a financial services company. Wow. This is a company primarily for... I think startups use these guys more than anything. It's a finance software platform. They have 35,000 customers, $5 billion they're paying for Brex. Some of you guys probably know this company. It's out there in Silicon Valley. Capital One down 3.7% after hours. Capital One's 4-quarter provision for credit losses, 4.14 versus 4.08. Okay, that's probably the property stock is down. They had higher credit provisions than expected, which means some of their loans weren't necessarily the best. Intel trying to recover a little bit, only down 3%. It was down 5%. Making a little bit of a green candle right there, but we got to see if we can keep moving higher. And then Intuitive Surgical, you got to move. Okay, that's up 2%. Intuitive Surgical, I'll see if I can get those earnings. Intel says demand is quite strong. Intel CEO says we can't get enough supply to meet orders. Intel CEO says chip maker missed a lot of opportunities. Intel CEO says production yields not up to his standard. So again, it's more a question of demand or their infrastructure for meeting that demand versus the demand not being there. And I think over the past couple of years, demand was more of an issue than supply. It's a good problem to have, but that guidance is a bit lower than what the street wanted, even if it's a supply issue. ISRG, let me see if I can get these numbers. Let me know who owns this one. Okay, beat by 11% on EPS, 253 versus 227. And then revenue, 2.86 versus 2.76 billion. Revenue's up 19% year over year, beat by 4%. EPS is up 14% year over year, beat by 11%. ISRG now goes flat. It was green by 2%. Now it's flat, hit 539, back to 525. I mean, not a bad print. Looks like their guidance might be taking them down a little as well. Double-digit beat on EPS. I mean, the most important thing we want to see as investors is our companies beating on EPS. EPS is a bit more important than revenue because that's actually the money that comes down to the bottom line. That's what determines net income. Net income, usually get a multiple on the EPS derived from your net income. Also, AI should be making companies more efficient to get their productivity margins, or at least their operating margins, to go up a bit more, which helps their EPS. So I really care about double-digit beats, or at least some type of a beat on EPS for companies during earnings more than revenue, and most of these companies are showing it. ISRG, there you go, back up to 2.6%, getting a little bit of love. Intel still down 4%. She's trying at 52 to not lose it, but it's just not enough strength. And then what's the other one? Capital One, that's down 4. Capital One is down 4. Clorox is buying Gojo Industries for $2.25 billion in cash. What the heck is Gojo Industries? Gojo Industries helps people with skincare, hand hygiene, and surface disinfection products. Okay, Clorox, which at one point last year had a higher PE than NVIDIA. That stock flat after hours, up 1% on the day. You guys know Gojo? I've never heard of Gojo. I've heard of Clorox. Not Gojo. Tesla, are we moving after hours with Tessie? Wow, 449. She'd hit 450 for a little bit. This one's actually making a bigger move. Intel is still down 5.2%. NVIDIA down 0.2%. Capital One down 3%. ISRG, that's up 2.89. Gold, again, 4,900. Looking at that for 5,000. But Tesla trying to get back up to 450. No, a lot of you guys know Gojo. Gojo is for people who work with their hands and get them dirty, not for people that get manicures. You know, I have not got a manicure in a very long time, okay? But Doug, you just reminded me that this weekend, I probably have something to do. Wait, did Elon just buy Tesla? Or more Tesla? Hold on. Elon buys 50,000 shares of Tesla? Is this true? Is this true? Cactus, we can get the SEC form. Let me know. That's the headline. Why is he buying more? Didn't he already buy Tesla? VG, by the way, 955 that ended up 5%. Hold on. Let me see if I can verify this. Maybe that's the reason the stock is up after hours. 50,000 shares of Tesla. I'm getting the headline from a couple accounts, but not confirmed yet. The SEC filing also isn't loading on this link. Did he actually? This doesn't make any sense to me, bro. I'm seeing multiple. I mean, that could explain why the stock's running after hours. I mean, if Elon's buying another set of shit. Look at that. Look at the stock. This has to be on this headline. 451 after hours. But I can't find a very specific, like, actual form to justify this. There's no way it's running on just randomness. I don't see the form yet, but that's the news. Potentially Elon buying another 50,000 shares of Tesla. 451. He was at Davos today. I said a bunch of stuff. Also, Trump is suing JP Morgan for $5 billion because they banned his accounts after January 6th in 2021. JP Morgan was up 0.5% today. Nvidia down a little bit. S&P is flat. ISRG still up 3%. Intel still down 5%. No, the robotaxi news we covered, but that already created the initial Tesla surge. That's when Tesla went from like 430 to 445 today. This news after hours, I mean, maybe it's about the same robotaxi stuff. Yeah, we already covered the unsupervised robotaxi. That stuff is like from 4 hours ago. So this after hours news, I mean, maybe it's just an extension of that headline. I'll confirm it if I see it. I don't see the exact headline yet, but I mean, I'm seeing a couple headlines, but just not exact confirmation. Tesla right there. That continues to be green. Those are most of the earnings that we have for today. Capital One again down 3.6%. Nvidia down 0.5%. Let me get the coverage on the J thing, and then we'll keep going from there.
Wall Street and the most powerful man in the world. In the lawsuit, President Trump alleges that JP Morgan debanked his companies for political reasons. The suit says that JP Morgan debanked the Trump-related companies on February 19th, 2021, shortly after President Trump left office at the end of his first term. And the suit says that Trump is confident that JP Morgan's decision came about as a result of political and social motivations. But the suit does not present any evidence that the debanking decision was made for a political reason. It alleges that JP Morgan simply didn't provide any reason for the debanking of the accounts, but that plaintiffs have subsequently learned, it says, that it was done as the result of political discrimination without saying how they know that. Now, the suit also says that plaintiffs have recently learned that JPMC, at the direction of Diamond, has unlawfully and unjustifiably published some or all of their names, including the names of President Trump, the Trump Organization with its affiliated entities, and or the Trump family on a blacklist. In a statement, a JP Morgan spokesperson said in part, "While we regret President Trump has sued us, we believe the suit has no merit. We respect the president's right to sue us and our right to defend ourselves. That's what courts are for. JPMC does not close accounts for political or religious reasons."
Well, you got Trump not only suing the New York Times, but now suing JP Morgan. We also have Alcoa earnings, which is one of the largest alumina makers in the country.
Alcoa EPS, $1.26 adjusted. We're not going to compare this to consensus estimates, though. There's some unusual items here. Now, in terms of unfavorable items, those are partially offset by, and they say this in the release, quote, increased aluminum prices, which more than offset increased tariff costs on U.S. imports of aluminum from Canada. Now, Alcoa does not provide financial guidance, but it does expect 2026 total alumina segment production to increase from 2025. This is due to productivity improvements, and alumina shipments are expected to be between 11.8 to 12 million metric tons. 2026 total aluminum segment production, that's expected to increase too from 2025 due to smelter restarts, and those shipments are expected to range from 2.6 to 2.8 million metric tons. And if you take a look at shares of Alcoa, they're up 4% right now. That's after finishing lower today. They're up double in the past 6 months because we've seen aluminum prices really join this industrial metals rally. Exciting time to speak to William Opplinger, the CEO of Alcoa, who's going to join us a little bit later here on the show to talk about those results. Before the conference call,
all right, so that was Alcoa, Capital One, Intel, and ISRG. I guess ISRG had the best one, up 1.5%. Again, Intel wasn't a bad earnings, but guidance was not up to the street standards, and that's why that stock is up 6%. The good thing is with 100 shares, you can at least sell a covered call tomorrow or just take the loss. It's a gamble at this point. But $50.72. Again, this one ran hot year to date. Earnings weren't exactly the best. This one now down 6.7%. It's had good resistance or good support at 47. So we'll see tomorrow if that one is breached or if this one ends up reversing. Now, if you believe in their sandbagging of the guidance and you don't believe that it's just low numbers based on supply, then they're probably going to beat those expectations just like they beat for Q4, 88%. I mean, those are amazing headline numbers, but they've got to do it consistently. And the good thing about AMD and NVIDIA is they've done it consistently, which is why AMD and NVIDIA continue to catch a bid. AMD right there, 253.73. That's up 1.7% on the day. NVIDIA just could not break through 186, 184.39 after hours as well. Yeah, Rocklab had a great reversal today. I mean, even with some pretty ugly news around Neutron, this one does not feel like it wants to slow down. Yeah, Alcoa's up 78% over the past 3 months. This one's had a really good run, and you are getting a lot more people think about the industrial use cases for alumina. Look at that stock right here. Year to date, it's up, but over the past year, up 62% as well, as that one gained more momentum. Okay, that's what we got. Is this a good buy tomorrow for Intel? I have no idea. Intel was purely a gamble. I don't know. I haven't gone through the numbers. I don't really care too much about the numbers. it's like if you're gonna buy a chip stock, I think the answer is NVIDIA or AMD or even Broadcom. Intel to me is just like a call option on Trump wanting to bring more manufacturing to the United States. Maybe there is a bigger fundamental thesis, but every like report I've read on, even the Bernstein analyst report, like the Bernstein analyst report was titled "Trump will save Intel." There's like some variation of that. It's like it's all based on a thesis that this one is a American onshoring play. Grab going up a little bit after hours, 457. Lemonade again, great day, 96.80, as that's green. And then Intuitive Machines, that's also up 5% on the day. What about the Intel foundries? I mean, yeah, sure. But look, they're doing 15 cents of profit, dude. If I'm buying a chip stock, like I'm buying a company that has incredible gross margins and that actually is growing, like really growing. Intel's not necessarily growing like that. But let's go to their website and see if we can get some more details on their earnings as well. We'll have Kris on in a little bit. We'll see what he has to say about what's going on in the macro. Again, AMD is growing 35%, NVIDIA is growing 50%, Intel's growing 4%. Like, I don't know if it's an investment on anything fundamental. I think it's an investment more so based on a thematic, which is okay because those have done really well this year. Intel's done really well, but I don't know if it's like the best reason to invest. Full year revenue was $52 billion. That was flat year over year. So it's basically growing 0%. CEO said, our conviction in the essential role of CPUs in the AI era continues to grow. We delivered a strong finish to the year and made progress on our journey to build a new Intel. The introduction of our first products on Intel 18A, the most advanced process technology developed and manufactured in the United States. Again, developed and manufactured in the United States. That's the entire thesis right there for why the stock has gone higher. Marks an important milestone, and we're working aggressively to grow supply to meet strong customer demand. Our priorities are clear: sharpen execution, reinvigorate engineering excellence, and fully capitalize on the vast opportunity AI presents across all our businesses. $4.3 billion in cash. Again, they don't pay the dividend anymore. Let's get a little bit more coverage right here on Intel. This is from Seaport Research. This guy is actually one of the most bearish guys on NVIDIA on the street. Let's see what he has to think about Intel.
HP, Dell, Asus, Lenovo, the companies who make PCs, and they were enthusiastic about Intel in a way that I haven't heard them in a very long time, many, many years. Intel has a new line of products coming out based on their Panther Lake series of chips, and those are performative and looking good, and customers like them. Looking at the numbers, I am reminded of my mentor once told me, never upgrade a stock the week of their earnings. Thanks, Brian. The December quarter was very strong. It was better than expected, but the guide is a little bit weak, and especially on the top line. And I'm okay with that, right? March is always the toughest quarter seasonally, right? After, it's the quarter after Christmas, and so things kind of calm down. I'm still pretty upbeat. I'll see what they say on the call. I'm still optimistic that they can recover this because, like I said, those products are coming out this year, and I think that's going to really drive numbers later in the year.
The reason for the shortfall on revenue guidance, Jay, was interesting. Supply constraints. So if you're thinking that this is a sale delayed as opposed to denied, usually investors can sort of look through that. But in this case, they aren't. And I'm wondering what you think, how do you interpret what they say in terms of why there's that shortfall?
I suspect it's the culprit that everyone's seeing right now, which is a shortage of memory, right? Memory is very tight right now. We've seen that in SanDisk and Micron and Hynix. Right, all of the memory capacity is going to AI build out. Those are high ASP prices. So the memory makers prefer those, and so I think that's going to cause constraints sort of across the consumer electronics end of things. Right?
Wasn't that not a surprise? I mean, when you see SanDisk
Yeah.
shooting higher, you see Micron shooting higher. You know that they're shooting higher because they are so constrained here. That there's such a shortage, and yet this was a surprise when the read through is in the Intel quarter.
Well, we'll see what they say on the call because I think there is even if laptops are down this year, I think Intel numbers can still work because I think they're going to gain back a lot of the share they've lost. They've lost a lot of share over the last 10 years, and they can start picking that back up. So I think the numbers can still work there. I don't think I'll give us all a little pass on this surprise because the extent of the memory tightness is pretty much unprecedented, at least in the last 20 years.
I was going to say it's also intensified in the last few weeks, at least.
There also is an argument that memory prices going higher definitely make it harder for Intel to sell at the margin that they were selling at when it comes to computers. So this really does become about the foundry business now. Trying to get a little bit of a bounce off that $50 range, $50.89. That's down about 6.4% after those earnings. NVIDIA, that's flat. AMD, that's flat. And then Rocket Lab, that's up a little bit. COF, Capital One. I mean, the only reason I expected this one to dump is because the credit card rates the credit cards are a big part of Capital One's business. So for them to have to deal with that overhang, that might be an issue. But the fact that they're acquiring a company for $5 billion, I mean, boom, that's something shareholders have to figure out if that's good or bad. Micron, by the way, this one, did it hit 400 today? It hit 397, closed at 397.58, 2.18%. Micron now $447 billion market cap. Because that one continues to have momentum. SanDisk actually, I think, took it on the chin today. This one, no, it recovered. It was down in the morning. There you go, back above 503. Again, this stock up 111% year to date. Capital One bought Discover a while back. Now they bought someone else. Well, the Discovery deal was a big one. How much did they pay for that? Does anyone know? That had to be like a lot more than $5 billion. $35 billion. Yeah, that was aggressive. That one closed in May of 2025. This one's relatively small compared to that, but it is another multi-billion-dollar acquisition. GitLab was up 12% on the day. There's a couple of rumors that GitLab's getting bought out. At least that's what I saw this morning. There's always been rumors that Google was going to buy them out. They even had pretty hefty stake back in 2021. But I don't know if that's actually going to end up happening. There was no other headline other than that rumor. I think GitLab right there up 12%. I still don't see confirmation of the Elon buying 50,000 shares. We would have got that confirmation right now or by now, but we have not seen it yet. Zeta after hours, that one continuing to move, 2175. There was no catalyst for this one either. I just think maybe some of these SaaS names caught a bid. Adobe CRM also caught a bid today, and maybe that's what helped Zeta. Couple of other headlines right here before we get into all the macro Thursday stuff that we have. So we talked about the retail investor stats. Retail investors bought $1.8 billion of the S&P 500 yesterday. So retail continues to step in and buy the dip. This was a weird one by the information. OpenAI planning to take a stake of customers' AI-aided discoveries. OpenAI CFO says the company will take a cut of the IP its AI helps customers invent. That's a little weird. That means if you discover something using OpenAI's API, then OpenAI plans to take a cut out of the thing that you discover. I didn't hear Gemini say this, Claude say this. Meta say this. Now, maybe if you agree to sign up for an incredibly, a significantly reduced amount of cost per tokens with the assumption of this revenue split in the future, then maybe that makes sense. But that's a really, I think, bad plan for OpenAI, because most companies that try to build something really important on top of the API are going to fail, or they're not going to build anything substantial. So you can't subsidize them with super, super cheap tokens and then hope that one of them takes off really big and then get like a small equity stake in them. Also, that there's no guarantee that that company that takes off because they get a ton of users and engagement on their version of the ChatGPT wrapper essentially turn that into a profitable business, which it doesn't mean that that equity is going to be worth anything. So once again, the creative financing and business model from OpenAI just seems like it's the wrong way to approach this. Whereas Anthropic is like, we're focused on the enterprise. We don't give a shit about controlling people's attention on a chatbot, which is literally being commoditized. There's millions of them that people can use. And we're working on getting real sustainable revenue. Like, is that just me, or does this thing feels like it's just weird at this point? Like, and also you're disincentivizing a lot of people to want to use OpenAI if you're going to require that you get a cut out of what they build off your API. Like, what's the incentive to me to do that versus then use Gemini that's going to take no cut? Unless you give me cheaper tokens. But the catch is if I pay less for tokens, you don't get any revenue. Like, you're not going to get any substantial revenue growth to justify the valuation. It's confusing. It's very, very confusing. And the more news that comes out, the more it feels like OpenAI has some broader issues. But long term, hopefully they win, because they kind of need to for the sake of the market. Broadcom right there moving a little bit after hours. GitLab down a little bit after hours as well. Here was another clip from Mr. Lutnick today, who kind of went scorched earth on Canada.
And Canada is just thinking in this arrogant kind of thought.
Well, but just to build on what John is talking about, it's a style question. Can you get the same results without using words like calling leaders weak or their economies decaying, right? Is it necessary to provoke the visceral feeling that we feel among a lot of leaders here and in conversations with international investors? I mean, is there any other way? Is that style more harmful than it is helpful?
Well, I think it creates listening. Like, people pay attention to it and listen to it. If you just sort of blend in, no one hears anything in Davos, right? Everybody says the same blah, 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 blah. And if you need to break out and you need to say it. So my view is, right, that Canada has never expressed to the world that they have the best deal, the second best deal in the world. The best deal in the world is Mexico, because remember, they have USMCA, which means 85% of the Canadian economy comes into the United States for zero. And there he is complaining that he's going to go to China and improve it. What's he going to do? China's delighted to sell to him. But do you think China's going to open their economy to accept exports from Canada? This is the silliest thing I've ever seen. They have the second best deal because Mexico's got a little better deal. They have 25% on the extra 15%, whereas Canada's got 35% on the extra 15%. But give me a break. They have the second best deal in the world. And all I got to do is listen to this guy whine and complain.
Mr. Secretary, in fairness, you've seen from the airplanes, you've seen about a 30% decline in Canadian visitors to the United States, if not significantly more. You've seen a similar type of decline from China. European travelers inbound have come down. There is a sense that people do not want to come to the culture of the U.S. And there is this anger about it. And I just wonder if you think that that's just temporary, or you just sort of dismiss that, or you think it's irrelevant to the actual issues.
I think what that is political marketing, right? The Canadians have the second best deal in the whole wide world. If they continue this path, right, which is a political path of a certain thing. I'm going to go fly to China. I'm going to open up my markets to China. I'm going to take Chinese electric cars and do all sorts of this stuff. Then when USMCA gets renegotiated
This year,
sort of like towards the end of the summer, in the middle of the summer, do you think the president of the United States is going to say, you should keep having the second best deal in the world? I mean, you guys are such great friends. I mean, they are playing with a set of rules that they haven't really thought. I can hear it in your.
So Lutnick and Trump, not the happiest with the Canadians. Obviously in Davos, Mark Carney was pretty aggressive with saying that the United States is overusing its hegemony with imposing these tariffs. I got a lot of different disagreements coming from different perspectives. Obviously, this is, I think, heightened from the China-Canada deal that has been trying to get done as well. That has to do with EVs. And so, I mean, we're going to see how the market ultimately reacts to all of these things. I think the most important thing to keep an eye on when we're hearing these types of claims are bond yields. And when Kris comes on today, in about a minute, we are going to talk extensively about bonds and what's been going on with the Treasury market. US 10-year right there, 4.29. Japan liquidity starting to become a bigger issue in the bond market. You've got a lot of headlines of European central banks dumping treasuries now. It's like a drop in the bucket in the overall amount of treasuries that are traded. But nonetheless, the cost of capital runs the world. And right now, the US 10-year continues to go higher. All right, so we had our earnings. Intel down about 5%. We'll see if anything happens during the call. Capital One down 3%. ISRG, that stock is up 3%. So ISRG was one of the biggest winners today. And we'll keep an eye on those a bit later as well. Next week is the biggest week for earnings as we have Microsoft, Meta, and Tesla. And we'll see where it goes from there. Kurt, thank you for official emit emoji. I didn't help myself today by wearing this hoodie, which is the same color as the UPS driver jacket, but it is what it is. That's what we got. All right, folks, it's Thursday. Let's bring on Mr. Kris Patel to the show and get into everything with the macro. Kris, what's up?
What's going on, man? How's it going?
Dude, it's been quite a few days where we thought we were tariffing the world, and now we're not. So I guess we'll start off with this. What has your reaction been over the past 7 days seeing what's happened with Greenland?
I mean, I can't take this administration seriously when they talk about these things, because it feels like someone comes up with like a bright idea and the president just kind of runs with it. And he's like, yeah, let's go with it. And then they could sort of see the market reaction to it. And they're like, oh, wait a second, maybe we don't want to do this right now. And a lot of the policies and decisions are it seems like they're being shot from the hip, which is fine. I was reading this really great article today about this is how real estate operates. And so Trump thinks in a very real estate kind of thing where people will go to you and say, hey, listen, you have this property. Let me buy it from you for X amount of dollars. Right. And the person can say no, and it's like, okay, everyone just kind of moves on. Then, of course, you can try to leverage that person saying, hey, listen, I know you have this issue that maybe I'll make you a deal. You're talking about sovereign countries now. There's a big difference between trying to buy real estate off of someone, like, cold calling them and trying to get like a deal done versus trying to say you need to give up your territorial sovereignty. So I think the president sees this more of a transactional thing, and he wants to apply the leverage that he has in the negotiation to basically get something for America. But in my opinion, it sort of just kind of makes everyone else think long term that wait a second, we don't want to be under the thumb of a hegemon that's cruel. Like a lot of these. If
the United States ends up getting certain parts of Greenland and having sovereignty and rare earth minerals or whatever, do you think it ultimately was a good negotiating tactic?
I think we had free reign over Greenland anyway. I don't think there was really anything that we didn't have sway over other than just having our name attached to the country itself. I think, to me, when I look at this, I see this as a way for Trump to cement his legacy in the history books, right? Where he's like, look, I want to be like, who was it? Andrew Jackson, or some of the other presidents that were able to negotiate deals like buying Alaska and buying Louisiana and annexing Texas and everything else. So I think to some degree, Trump is just trying to cement a legacy, and territorial expansion is probably one of the greatest forms of legacy building. So I think that's probably what's driving him in the short term. But he, like I said, I think he is pragmatic enough to know that this is not the cause he wants to die on. So, he saw the public backlash from the Europeans, and the Europeans didn't roll over. You saw backlash from a lot of the members in his own party here in the US kind of say, hey, listen, what you're doing is kind of wrong. And they might have said it more privately than the Democrats, who kind of just came out and said it openly. And so I think in that regard, it kind of like set the administration, to kind of slow down a little bit. And, say like, hey, listen, let's work on a framework of a deal rather than just plain out say that, hey, listen, we're giving up on this venture. And I'm sure that concessions will be made on both sides.
You saw the stock market drop.
Yeah,
right?
I think it's interesting because the day that it happened, the market dropped, but it wasn't like, oh my God, like the world is ending, kind of like Liberation Day drop, because everyone kind of got numb to the idea that Trump was going to just, back off anyway. So I think the markets anticipated, especially retail, who were very greatly rewarded the first dip buying opportunity in April. So they saw this and said, whoa, the market's down, time to buy. And so a lot of people, they got in, and especially with some companies, like I had like calls on Meta that I had sold against my calls. I bought them back, and now Meta's up, and I'm like, okay, let's see where this goes, and I'll sell them again.
Right.
So this volatility is amazing because you can play this volatility. If you have enough courage to play it, you can play the volatility and do well. And I think that's what 2026 is going to be about. Just when things get vastly oversold for no reason other than some kind of geopolitical commentary, I think those are great opportunities to buy companies that are fundamentally strong, that have potential to recover regardless of whatever the end result of these negotiations are. So yeah, I think that's where we are.
Okay, so let's get into bond yields, which I know was something that you wanted to talk about, and overall what's going on with treasuries. I guess the conversation starts with inflation. Yeah. What are you thinking about when it comes to this? And then we'll get into the 10-year.
Well, I think the first thing is just this great post from, let me just bring it up real quick. I was wondering because I saw the Trueflation data kind of just sink. And I was like, okay, let me see how this is actually correlated to, it's funny when I need something up, it doesn't come up. That's us. Okay, there we go. So this is the chart that I was actually looking for. And it kind of shows that Trueflation, you got to take the data with a grain of salt, right? They're doing more real-time inflation gauging from a whole host of data points. And so at times, they can be a little bit earlier than how the Fed gets their data, because the Fed tends to do a lot more survey-based analysis on from the BLS. So whenever they do that, it tends to lag. And one of the biggest components that tends to lag everything, especially with the data, is the one in shelter, right? So OER, which is owner's equivalent rent, tends to be lagged by at least sometimes almost 9 months. That's why if you look at the data from Trueflation, you can see that the peaks and valleys, they kind of appear around the same time, with usually about a 30 to 60 day lag. So you can see here that according to Trueflation data, the inflation rate has gone down to almost 1.26%. So this is one of those things that the Trump administration was actually kind of highlighting in their Davos speech as well, saying, look, I don't know why you guys think inflation is still a problem. Yes, the BLS data that's coming out is, sort of late, and being that it is late, we don't want to rely on that. You want to make policy decisions based on more real-time data. That's why you don't get stuck in a 2021 kind of event where you saw inflation starting to creep up and the Fed didn't react, right? They just said, it's okay. Whereas, if they had followed some of the other tools that were out there, they would have saw that, hey, maybe it's time to start raising rates right now. And same thing with the federal government. From a monetary standpoint, from a fiscal standpoint, they could have said, hey, wait a second, inflation is starting to rise. Maybe we need to curtail on some of these spending programs that basically made inflation go out of control, right? So as an example, the Biden administration was passing all sorts of like moratoriums on housing and like what is that they called student loan debt, what is it called, like pausing it, moratoriums. So all of these things led to a situation where you had people just flush with cash and the spending just went out of control, right? And so a lot of times from a policy standpoint, you sort of want to be ahead of things rather than being behind them, because it's almost like you're going to end up having to rescue everything, and then the rescue part is probably going to be even worse. And I think there's a couple of data points that kind of show how this works. So if you look at this right here, This is CPI with shelter, and CPI shelter. You can see we peaked out in our regular CPI here in June of 2022, and it's kind of been on a downward trend since. But that data didn't show up. The downward move in shelter CPI didn't show up till almost a year later, right? And you can see since then it's been kind of trending lower. And then you can also see if we just took shelter out, you can see. Sorry, damn it, where did I put that data? If you took shelter, man, I had it over here for a second. Where the hell did it go? Whatever. The rental vacancy rate here is starting to creep up. This is from Q2 of 2025. It's probably a little bit higher, around like the 8s right now. And so even data from like the private markets, you can kind of see like on Zillow, like a year over year, the number of rentals that are currently available is almost 700,000 rental homes or rental properties in the market, with a year over year rent change of next to nothing. Now, of course, a lot of this stuff is going to be regional, where you're going to see some regions have higher rents and some have lower, but the overall is pretty negative. So, and this correlates, because if you deport 2 million people, right, that's a lot of people with a lot of homes that just kind of don't need them anymore, right? So as vacancy starts to rise, a lot of shelter, like especially rent, landlords are going to have a tougher time saying, yeah, I want my 3% year over year rent increase. On top of all of that, because we had such a big issue with shelter, the number of homes being built had actually skyrocketed. And since then, the number of homes under construction is starting to kind of come down a little bit, right? So you can see multifamily starting to come down, but there's still a deluge of homes and apartments that are coming up that are basically going to be sitting, in my opinion, probably add to the vacancy rate. So
is the implication of this that rates need to come down, essentially? Like, I would
say what the Fed is being cautious with right now is valid, but they should be a little bit more dovish in their speak, right? So a lot of them are just saying inflation is sticky, and that's the narrative that they're kind of driving home. And I don't necessarily think that's the case. I think that we are in the right footing to get inflation down. And I think by the end of next year, we could be at 2%. Now, the question is, and this is the debate that's happening on Twitter, saying, look, the Fed has kind of a dual mandate. They need to worry about unemployment as well. And unemployment is starting to kind of rise a little bit, right? So while we do want to see inflation come down, we also don't want to deteriorate the job market, because once the job market goes, that genie is really hard to put back in the bottle. Because, when some people lose their jobs, they stop buying goods and services from other people. Those people start losing their jobs, and then those people start buying less goods and services, and then it kind of cascades into a sort of an economic event. So right now, seeing that unemployment is starting to rise, if the Fed proactively reacts and says, hey, maybe we need to do a little bit more support on the economy, throw a few more cuts in there, it's more likely that a lot of businesses that want to invest capital, that want to invest resources in expanding, they'll be able to finance that. And if they're able to finance it, that means that's more jobs. That means that people, have more opportunities, right? So
let's transition then into the bond conversation, because even if we do cut rates by another 25 bips, which we've already done 75 bips over the past year, this 10-year is not coming down. And so what is your analysis on why it's not coming down? What do you think is it going to take to come down? And how bad of a situation can we get in if this starts to move even higher from these levels?
So the issue here is it's more or less, hold on one second. Yeah, show your screen. The issue here is that the government has a spending problem, right? So the bond market works in two ways. If they feel like, hey, listen, the creditor nation that we're basically borrowing from is not going to be able to meet its debt obligations, they want a little bit more money. Now, the Trump administration, because of its tariff policies and accusing all of these countries of quote unquote stealing from America, a lot of these countries are saying, you know what, we need to sort of decouple ourselves away from being so dollar dependent. And this was before the Trump administration also. Some of it has to do with the Biden administration. When the Ukraine war started, the US, one of the first things that it did was start sanctioning Russian assets, start sanctioning Russian banks and everything else overseas. And so when you have this dollar dependency, countries feel like they're losing their sovereignty. And under Biden, it was a little bit more like, oh, maybe we need to diversify away from the US dollar and hence, away from US bonds. Under Trump, who actively uses the dollar as a weapon and as a cudgel, a lot of countries are saying, hey, maybe we don't want to be completely dollarized. Maybe we want to kind of diversify our holdings, especially our Forex, to actually have other assets. And that's why you're seeing gold starting to rise, where people are saying, you know what? I like the dollar. It's a great transactional currency. It holds its value long term, but I also don't want to be in a position where my entire economy depends on a tweet, And so in that regard, what you're seeing is a lot of the traditional buyers that were price elastic, they would be guaranteed, they would be, like every auction that came around the treasury, they would be the guaranteed buyers, no matter the rate that they were getting, they would be buying. Now you're starting to see the private market kind of pick up the slack a little bit. You're seeing like hedge funds and everything else. They're willing to buy US treasuries, right? The problem is they're not willing to accept a 3%. They're saying, hey, I want 4, I want 4.5, So in that regard, that's what we're seeing. So the amount
how
of
does
money
it have to deal with Japan? Because that's following the US.
Well, Japan has been a natural buyer of US treasuries for a long time. They've been dealing with deflation forever. So one of the things that that a lot of people have been doing is saying, let me go to Japan, borrow money in yen, sell the yen, and buy US dollars and treasuries, and now I'm getting a spread, right? If you can borrow money at 0 and at the same time you get a 4% return, you're actually doing really well, right? So a lot of people have been doing that, where they've been borrowing yen and buying borrowing cheap from Japan and buying treasuries here in the US. But it's not just us, it's all over the world. Okay, so if you look around, you can see that everyone else's long bonds have been starting to rise also. So if it was just the US, it'd be one thing, but it's happening all across the globe. So in that regard, now the Japanese are dealing with, of course, their own bout of inflation, thanks to, believe it or not, rice. I don't know if you saw that.
Yeah.
Like, do you know the cause? Yeah. Sorry.
I don't know the cause of it, but yeah, I did see that rice has gone up.
Yeah. The Japanese diet is heavily reliant on rice. Of course, it's not a hard thing to see, but one of the things that we've seen is the price of rice skyrocket in Japan because of some major weather events, and that sort of started to kind of creep up into their prices. So their food prices actually started to get really elevated. So when that started to happen, now of course inflation started to rise in Japan, and Japan has to start raising its interest rates. And so in order to combat this inflation, one of the natural buyers of Japanese bonds has been the Japanese government, the Japanese treasury. So the Japanese government is their largest creditor. So now all of a sudden, the Japanese treasury, they can't exactly go out there and say, yeah, let me go buy up all the bonds and do something called yield curve control, because that would defeat the purpose of trying to control inflation. So now all of a sudden, the natural buyer of Japanese bonds that were holding yields back from rising is no longer there. And so because they're no longer there, now all of a sudden, a lot of these investors in Japan who are natural savers, they've been saving forever, they're looking to say, wait a second, I can get 4% outside of the country in the US, but I can also get 3 something here in Japan. Why wouldn't I be in my own local currency? So a lot of these insurance companies, banks in Japan, they started to say, I'm not going to buy as many US treasuries. Instead, I'm going to buy Japanese JGBs because I'm actually getting a positive yield on it now. So, a lot of this stuff
is it something that's blowing up out of proportion in terms of the coverage that it's getting, or do you think it could become a real issue this year, the bond?
I mean, I think this is where Japanese politics kind of like gets a little bit, into the mix of things, right? Where on one hand, you've got a president, prime minister, who wants to see continuous economic growth in Japan, and is naturally a populist person, so they want to see them do well. So there's a clash between fighting inflation from the monetary side, and then the fiscal side, where the fiscal side is just like, let's cut taxes, let's spend more money. right?
Yeah.
So you're seeing this kind of this battle, and it's not just in Japan, it's happening kind of all over the world right now. You're seeing it with us, where the executive branch, the federal government, they want to go out there and spend more money. And then you've got the Fed and Jay Powell saying, listen, inflation is a problem. Don't spend as much money. So this is where I think the world is kind of starting to get a little bit queasy and saying, have these politicians lost their mind and basically are getting to the point where they're just spending way too much and not focusing on their country's fiscal health, And so that's the reason why everyone's demanding higher yields. I mean, it's natural. I think it's natural.
So, I mean, your last time you were on, your kind of perspective on the markets was don't take as much risk because of random stuff that could happen. And then a week later, the Greenland thing happened. But then a couple of days later, it went away. So is your perspective still kind of just like take a chill pill on the risk curve?
I would say this year, you definitely have to be a lot more cautious. There's going to be volatility here and there. So, understand when things get oversold, like which companies you want to buy into and which ones you kind of want to stay out of. Understand that the debt dynamics of every company, because one of the biggest challenges that you're going to see is that a lot of debt for some of these companies was issued in 2021 and before. So during that time, interest rates were super low. So they were able to borrow money at very low prices, right? Now, all of a sudden, a lot of that debt is coming due and they have to refinance. Now, if you have to refinance at 300, 400, 500 basis points higher than what you bought it for before, now all of a sudden, you're cutting back on your earnings expectations going forward, right?
Right.
And so a lot of companies now, instead of spending money on growth, they might say, hey, listen, we need to focus on debt reduction. Instead of spending money on hiring more people, we need to spend, do less. So this is where you have to take everything on a company by company basis, right? So if you're invested in a company that has high levels of leverage and the 10-year is just not moving down, which is what you're going to benchmark against to borrow, then you got, you're probably going to see some underperformance.
Let's talk about Meta. Big conviction for you this year. I think a lot of people in the chat put in the chat. I'll do a poll as well. But put in the chat if you're heavy Meta. Like if Meta goes to 800 this year, who makes a lot of money? Put in the chat if you are taking a big bet on Zucks. Why do you think the stock fell to 600? And then why do you think the stock is back at 650?
It just goes back to capital allocation, right? Investors are going to look at you in a way that they're going to say, hey, listen, are you actually spending money on creating shareholder value? Or are you just burning capital to say that, hey, listen, I want to be in it? Like, and the problem with Meta is that, yes, they generate a ton of cash flow, but they've also guided to spending a lot of money, right? So a lot of people are looking at the metaverse and saying, wow, this guy spent what, like $40 billion on this thing? And it ended up being very, caustic to earnings. Like, is it really worth it? And so when he comes out and says, hey, listen, I know I spent a lot of money on metaverse and it didn't go anywhere, but trust me, I'm going to spend even more money on this AI thing and it's going to work out okay. So, it's like, so the market's just like, hey, listen, what the hell? So it's the same thing. I mean, look at Oracle, right? Oracle, they saw the OpenAI partnership and they got super happy, pulled up, and then Oracle's like, hey, listen, we're going to be issuing all this debt in order to finance this construction. Everyone's like, whoa, wait a second, what? And then now, because OpenAI and Oracle is like an OpenAI leverage proxy at this point, OpenAI doesn't look like they're going to be the main winners of AI, quote unquote, like they were in September. So everyone's like, wait a second. Oracle is in bed with OpenAI. OpenAI isn't doing well. That means that Oracle shouldn't be worth nearly as much. And since then, look at what's happened to Oracle, So,
but are you concerned for Meta going into earnings?
I'm not.
So I think, so next week you think what, gaps up to 700 on a good report?
It very well could. I think the challenge is not going to be around the actual numbers that come out. It's the sentiment that Zuck is going to have to kind of bring out, right? So as an example, whenever Elon comes on, bro, Tesla could have the worst quarter. Sales are down, earnings are down, but he comes out and says, robots. And boom, the market's like shoots higher. When Zuck comes out and says, hey, listen, we did amazing, our earnings are growing, but I'm gonna spend money on the metaverse, the market's like, nah, screw that shit. We're not gonna play in this game, you know. So
it is growing. Meta's growing revenue 60 or 26%. EPS is up 70% the past 5 years. Tesla, if Tesla had those numbers, that stock would be like $5,000. Tesla doesn't have anything close to that, but the market doesn't like how Meta is allocating their capital. Do you think Anthropic's recent progress and the momentum that they're having in the enterprise and their lack of focus on consumers is potentially a threat to Meta as well? Or no?
I don't think so. I think each of the AI investors are carving different niches for themselves. Anthropic right now is doing really well with enterprise. Google and Gemini is really doing well with consumers. So they're kind of eating OpenAI's lunch from both sides, right? So Meta's AI, in my opinion, haven't seen much in terms of like something that's user facing or even enterprise facing, because the internal use cases for AI for Meta are just that strong. Like AI ad targeting is going to be a big deal. I mean, you can see that how big of a influence it is on their earnings. If this AI investment wasn't panning out and it wasn't working out, you wouldn't see the earnings beats that Meta's been having. So Meta has clearly stated that AI, in the world of AI, they are doing really well internally investing in the tools that they need, and that eventually, I think that if they do have that excess capacity, and Zuck said this, if we end up building this stuff out and we don't need it internally as much as we are projecting right now, we'll sell some of the services and turn it into a side business, kind of like how Google and Amazon. Remember, Amazon built AWS not for everyone else. They built it for themselves. But then they realized, like, wait a second, other people will probably use this too. And so they started selling it, and then it became a business item for them, right? A business line. So I think this is kind of the same thing for Meta as well, where they're going to use all the AI resources that they need to. And if there is any sign that they might have overbuilt, they know that demand for AI is like gangbusters right now. There's no shortage of AI demand out there that they could just kind of sell into the market and generate some return from that. So unlike the metaverse, I think that's the big difference, right? If Zuck invested in this metaverse there's no real tangible demand for the metaverse. Like, you don't see everyone's like, man, I wish I could go in the metaverse and do X, Y, and Z. But on the other hand, you're seeing every single enterprise, every single company, even users, all clamoring for AI related services, AI software, and all the other stuff. So there's a big difference between metaverse spending and in AI spending, where I think that there's actual ROI coming from all the AI spending that Meta is doing. Sorry, that was a long.
What do you think about? No, that was good. I mean, a lot of people I think agree with that thesis, and X Wednesday is going to be important. I mean, Zux is really going to have to deliver a call, not just numbers that the street's impressed by. What do you think about GDP growth? This is the highest in 2 years. I mean, it's pretty remarkable. Do you think we can actually continue growing at 4 or 5%?
I mean, as long as this wave of AI capex, keeps up, I think there's a good shot that we see a good amount of growth. The problem that you run into with these figures, though, is that a lot of the financing that's being done by a lot of this capex build out is being done with debt, right? And the thing is, at first, when the first bout of capex was being done, it was being done by pure cash flows. Like, all of these companies were generating tons of cash flows. So the first tranche of investments came from that. The second tranche came from early investments in debt. And the thing is, as time is going on further and further, now you're realizing that unlike the free cash flow, there's a limit to how much debt that a company can issue without starting to impact its own valuations. And Oracle is a clear example of that. When Oracle first started building the AI infrastructure, it was doing it purely from its cash pile. Now it's doing it via debt. Facebook or Meta, same exact issue. First, they were doing it from free cash flow. Now they're doing it through debt. Now there have been doing some transactions that are a little bit off balance sheet transactions, like the deal with Blue Owl, where technically speaking, Meta is liable for the AI capex spend, but they're not doing it directly. They're going to another bond issuer, and they created a separate entity that issues bonds that Meta is then becoming like a tenant for. So it doesn't sort of mess up Meta's balance sheet, but at the same time, they are ultimately responsible for that spend. like, I don't know how to describe it, but now the AI boom is being like capitalized by debt markets. And so if the debt markets stop cooperating at any point, then you could see the amount of capex start to come down. And if the capex comes down, then of course you've got all sorts of tailwinds on issues that could come around, right? In which case GDP growth, which has been supported primarily by AI capex spend, will kind of like trickle in the other direction. Now this is where it's sort of important for the Trump administration to get interest rates down, because they need the other parts of the economy to pick up the slack, right?
Yeah.
So if you have AI capex starting to slow down, but you have businesses starting to spend more money and hire people and all this other stuff, then of course it kind of like negates things down. So on one hand, you've got all of this debt-fueled spending from AI that could start coming down, but then you also have all these, and Lutnick points this out and Besant points this out, a lot of companies are reshoring, right? They're building factories here, they're building jobs here. And
that's why
all
Intel
of that
is up 50%, even though there's no
right.
real earning.
And that's why, and the thing is, in order to power that, you need lower interest rates, right? And so that's why the current administration, they see what's coming around the corner. These are seasoned business people. They see that AI capex is not forever. They need the rest of the country and the rest of the capital markets to spend more money. So this way they can kind of like basically take the mantle from the AI capex area. And so this way you see this constant growth. And so I think that's where we are right now. The administration is doing everything in its power to, supercharge growth. They see AI capex slowing down at some point, but they need the rest of the economy to pick things up.
Got two headlines after hours. Amazon, according to Reuters, getting ready to fire another 30,000 corporates. That would be your white collar jobs. And Trump is on Air Force One right now. One of the quotes he said, 25% tariff on anyone dealing with Iran will take effect very soon. Do you believe when he said, like, I mean, what? That's China and Russia that buy Iranian oil?
India, dude. India's a big buyer of stuff too.
That's fair. Fair.
And there's the problem with hitting people over, like when I was a kid, my mom, sometimes you'd get the hanger and beat me, right? Like, yeah, it's his name. I'm an Indian, bro. If you don't, do it right.
That's a wild thing to say, bro.
Right?
Like,
no, I'm just saying, I got my ass beat. That's why I probably did well in life. So I got my ass beat. The funny thing is, over time, the hanger didn't work anymore. You know what I mean? Like, hey, I'm going to get the hanger. Okay, mom. Okay, go ahead. Here, do it on this arm this time. The other one's kind of bruised right now. It's like, so it's just one of those things that, like, Trump is using these tariffs way too frequently, and so every time he does it, people are getting used to it. And you don't want to these people keep getting used to it, because then what they're just going to do is just wait you out.
I agree. That's fair. I mean, a lot of these threats end up feeling kind of empty. Do you think SCOTUS, I mean, I know we don't have the answer yet. Do you think we get an answer soon?
Just to clarify, I deserved every single beating that I got. Like looking back now, I was not a good kid. So I got beat, but it was probably the thing that made me a better person. So just want to clarify, like, my mom's not guilty of beating me for no reason. She wasn't just like, come here, I'm going to put the cigarette butt out on your arm. Like every time I did some shit, I deserved it. Sorry, go ahead.
Do you think SCOTUS ends up getting rid of the tariffs or not? Because then he doesn't even have the authority to make these threats.
I don't know, man. SCOTUS has got a very weird situation in their hands, because on one hand, they want to be unbiased on this, right? And they want to try to be as judicial as possible, but they know the ramifications of this could be long lasting, right? So this is one of the things that Brett Kavanaugh kind of said. I was listening to one of the things about firing of Lisa Cook, right?
Yeah.
Even though he was like, even though we could theoretically, allow this to happen, now all of a sudden, other presidents that come in and future executives that come in, they can start firing people at will, because they could just look for any infraction and say, oh no, I believe that this is not right. And they could just fire them. And now all of a sudden, this wall that's typically stood is gone now. So I think when I look at this, the Supreme Court is like, look, we don't want to rule against Trump because then it gives away a very powerful tool in the arsenal of the executive branch in order to conduct trade policy and also to some degree national security. So this is the question that's on the Supreme Court's brain, which is if whatever decision we take today will impact future generations for the next 100 years, if anything. So back in the day, we never really had to worry about tariffs because tariffs were never really a cudgel that anyone used. So that the Supreme Court never really had to rule on it. Now I feel like this is like a trade tool that's just a valid trade tool that's used to be used very, very scarcely is now being used every other day.
Yeah.
So
no, I agree. And I think that's why the market's on tilt every time we get some Supreme Court news. But until we actually get a decision, I mean, from all the judicial experts I've read on, they say this thing can't get passed. But there is a loophole, as you said, about the Fed having executive authority or the president having executive authority for foreign policy, where they might agree with. But we're gonna have to see.
And that's the thing. The reasoning behind these tariffs is that he's doing it for national security.
Yeah.
Right. Like, do you think that these tariffs are making America more safe or less safe? And that's the debate that's being had right now. And the question is whether or not the executive branch should theoretically retain this power. I don't know. Like, technically in the Constitution, it's the job of Congress to do all this stuff, not the executive branch. But then, of course,
I do think Trump's right. Congress doesn't get shit done.
Yeah,
right.
That's the other problem too. Like, and this comes down to like certain powers in the Constitution. Like, only the Congress has the ability to declare war. Yet, how many presidents for the last 70 years are just like, yeah, we're going to go take military action in this country and that country and do this and do that? Like, what happened? Is Congress not like, I thought Congress was the one that's supposed to like, allow for these things to happen. So now we get into all sorts of soft wars. And this is not just the Republicans. This is Democrats too. I don't know.
Is there anything else in the macro that's really been catching your attention? We talked bond yields, GDP, shelter inflation. Is there something you think that people need to be looking at? I mean, gold looks like it's about to be 5,000.
I mean,
the commodity super cycle, I guess, continues.
I think I look at this like move upwards in gold and silver and all these other things. And I have to ask myself, like, when does it end? And if you look at the last time this happened, this was in the 70s. I could put it on my Twitter. If you saw, gold went from $100 to almost $600 from 1971 to 1980, 81, I think 77 to 81. So, if we use the same context and somewhat of a same length on gold could run prior to all of this, which was around $1,800. Let's say it had the similar run. This thing could get to 10,000, maybe even 12,000. I don't know. It just kind of depends on how
that would be like an 80 trillion market cap.
Yeah, it's insane. But at the same time, all of these damn countries are going out there just printing money. They're devaluing themselves all over the place. Every single country is spending more than they're taking in. There's no semblance of fiscal responsibility on anyone, So it kind of makes you think like, hey, gold is that canary in the coal mine.
Do you think there will ever be fiscal responsibility from countries?
Yeah, eventually. But it's going to be the bond market that comes in and destroys things. And then everyone's like, oh, my God. It's kind of like a credit card. As long as you have a job and you pay your credit card, everything is fine. But the minute that someone says to you, listen, I'm not going to give you any more credit, then you got all sorts of problems, right? And we've kind of been swiping our credit card a lot. And not just us, everyone. Like, you look at the GDP, like debt to GDP ratios for almost every country on the planet. They're way higher than they've ever been in forever. So a lot of people are saying, I can't even hide in another currency. Like, there's no sense of fiscal responsibility anywhere that's liquid enough to be in. So everyone's just like, all right, well, what's the next thing that, holds its value long term? Gold is that pick. Debt to GDP of Canada is 111. Look at it, US is 124. The Europeans are in the same boat. You know,
It's pretty. It makes you think money's a joke, to be honest.
China is the worst, believe it or not. Even though it says 88%, but the thing is, what it doesn't encompass is all the debt that the local government has. And so if you incorporate that into it, they're close to like 200 something, maybe even 300%. It's just with the Chinese, you can never really trust their numbers. The other problem is even countries that have, debt to GDPs that are, manageable, like lower, the breadth of their markets is not strong enough to support the liquidity needed to transact around the world, right? So the US is the most liquid market on the planet. Like US treasuries are accepted everywhere. There's plenty of countries that use the dollar or a dollar peg. There's not a lot of currencies out there in the world that have a similar kind of similar edge. So everyone else is saying, what's the next thing that I can retain my value in? And of course, that's gold. So people are, and not just gold, precious metals. So gold, silver now. So silver is having its run, So
do you think the Europeans are flat out lying when they say we're going to threaten to dump our US treasuries?
Yeah, I don't think they're going to do it. It's not in them. They're doing what they have to try to get Trump off of their back. But I don't think that they can completely decouple themselves from the US markets nearly as much as they think they can in a short period of time. Maybe over the next decade, 2 decades, they could, but it's not something that they can do instantly without taking massive losses themselves, right? So,
yeah, I think it's tough for them to say we're going to put our money somewhere. I mean, as you said, they need liquidity.
Yeah.
And
now,
really
the one thing that I did like seeing, do you have the quote from Davos with the German Chancellor Merz, what he said about Europe needs to start investing in itself?
I'll see if I can find it.
It was on Twitter. I think that's a very important point that he made because, the US has been this guarantor of safety for the Europeans for such a long time that the Europeans have kind of gotten a little bit too lax. And then on top of it, they become a lot more bureaucratic in nature, protecting incumbents rather than allowing for more entrepreneurship. And I think this was a great quote that he said, and hopefully they take it to heart. Go ahead and play it and take the music off. I mean, turn the sound down. There you go.
Of those problems, both Germany and Europe have wasted incredible potential for growth in recent years by dragging feet on reforms and unnecessarily and excessively curtailing entrepreneurial freedoms and personal responsibility. We are going to change that now. Security and predictability take precedence over excessive regulation and misplaced perfection. We must reduce bureaucracy substantially in Europe. The single market was once created to form the most competitive economic area in the world, but instead we have become the world champion of over-regulation. That has to end. We are aware of those problems.
I always don't like critiquing other countries and stuff because I'm not from there and I don't fully understand it, but I feel like even Europeans agree that the level of bureaucracy and lack of innovation is something that's just not sustainable over the next
and if the Europeans really take heart to this and say, you know what, we are going to start cutting red tape, we are going to invest in our entrepreneurs and not just our bureaucratic systems, I think Europe could actually have a renaissance, and Europe could be a great market to invest in, long term. They have a population that's highly educated, right? They've got, dude, these guys owned half the planet. Don't sit on the Europeans, think they're just a bunch of idiots. Like they conquered half the planet. These are smart people, okay? I'm not trying to glaze the Europeans by any means, but I'm just saying they have the talent to get places if they really wanted to. The problem is they got too comfortable, and Trump reminded them, hey, listen, if you get too comfortable, be ready to be subservient to us, And I don't think the Europeans want that. So this next generation of European entrepreneur, if these guys really support them and create avenues for growth, it could be a renaissance for Europe. As of right now, I really don't care about Europe. I think Europe is sort of cooked because its population has gone uber socialist. But if you start to see politicians talking about this need to cut bureaucracy, and they actually reinforced it in policy, you could see the growth rate in Europe starting to rise again. And I think that would be ideal for them. It wouldn't be necessarily ideal for us. You know why it wouldn't be ideal for us?
Why?
Because it's a market that's huge that we've been dominant in without anyone. Like, okay, what's the European equivalent of Google?
Yeah, I feel you.
What's the European equivalent of Meta or Facebook? Nothing, because they never took the time. Anytime they had a competitor come in, like Spotify, right? They're like, all of these guys, all of these European entrepreneurs, they all complain about the same thing. I have a great idea. I want to deploy capital. I want to innovate the shit out of this thing. And then what happens? They're like, oh yeah, we're gonna put a wealth tax on what is it called? Unearned income. And these guys are like, what? Like, I haven't even made any money yet, and you're already starting to try to tax me to death. You know, Europeans have killed their own entrepreneurial spirit. So unless they reverse course on that, I don't really see much hope for them. But if this is the wake-up call that they needed, and I really do hope they did, because at the end of the day, one of the great things about the U.S. is that we are not afraid of competition. Okay, we are all about that competition. Bring that smoke, baby. You know. And I think that makes us strong in the long term anyway. So, and I do want to see the West succeed. I don't want the Chinese to have complete dominant share over everything that's sold into Europe now, which is what's happening. The U.S. has kind of backed off and are starting to kind of like retreat from Europe. And who's filling the gap? It's the Chinese. I don't want the Chinese to be in Europe. I want the West to remain the West.
All right, let's do 10 minutes of some rapid fire for Kris, and then we'll get him out of here. First, so any questions, any tickers, I'll try to hit them with Kris. VG, Kris, how do you feel that they won the arbitration case?
I think it shows that they actually do have legal basis for the selling of natural gas that they had. And yeah, they lost the BP one, but they won the other Chevron one. They won this Repsol one. So the fallout of this arbitration may not be as bad as people had originally thought. Now, Venture Global has one problem, and people really need to understand they are still beholden to the spot markets. And right now, the spot markets are not good for Venture Global. U.S. natural gas prices have spiked up primarily because of this winter occasion. And on the other hand, European TTF is starting to come down because there's a lot of supply. So the supply glut narrative is not dead. Okay. So in that regards, the chances of Venture Global automatically going crazy high, it's not likely. You're going to see a more structural, hey, they're going to grow, they're going to pay down their debt, they're going to generate more cash flow, they're going to start buying back their shares. And the timeline on this company is going to be a lot longer than something like a tech company where it's just like, hey, listen, we've got this innovative technology. All of a sudden now they're growing at 60, 70% year over year. Like, unless you get some kind of catastrophic event like we saw with the Russia-Ukraine war situation where natural gas prices in Europe spike up 500% and US gas prices remain the same, you're not going to see that huge uptick in Venture Global stock prices. So I would say if you're in Venture Global, you better be a long-term investor. Anytime this thing really spikes up, consider selling some cash secured, calls, because the IV spikes, you get a little bit more premium, and you can use that to buy more shares and lower your cost basis, which is traditionally what I think Matt has been doing. So.
Okay, that's fair. Next decade, still bullish on that one?
Yeah, both of them, man. Natural gas ain't going nowhere. Everyone's going to use it, But like I said, you better be ready. This is an infrastructure play. This is not a technology play. There's no just buying it and boom, it goes up 60, 70%. I mean, theoretically, if it gets low enough, then yeah, there might be a 40% retracement. If you look at Venture Global, it got to like 598, and our friend Derek was just loading the boat, So he's up. Almost 100, not 100%, but almost like 60, 70%. But that's because it got to a level that it was way, way oversold. So, yeah.
Mike Ron Sandisk, would you fade the memory plays or pile in?
It's a cyclical business, bro. I'm staying the hell out. I am not the tech guy. Like, the guy that you all should be listening to is Jose. Okay. Jose has called this stuff way more than I have. One of the things I told you last time, one of the lessons that I've learned over the last year is stop putting my nose in things I don't understand. And I don't understand semiconductors as much as I try to read up on it. I do my research on it. It just gets away from me. And so I'm not even going to try to address it. If Jose says Micron is still good, by all means, listen to him. Don't listen to me.
HPE, any thoughts on that one?
Data centers and space play.
I don't know if
to
HPE
me
is
it's
a data center space play.
I don't know. Once again, this is way beyond my understanding. You know, the one thing I was able to call was a sharp rise in SMCI very, very early during the finance junkie days, because that one was just very small at the time. It's a low margin business. It's got huge growth, but at the same time, the margins are super low. So, you know.
ASTS, do you still believe in this, or do you think it's getting expensive?
I think it's getting expensive, but relative to where it could end up in 5-10 years from now, it's probably fairly priced. No.
Okay,
The key is when they start generating their revenue, what is the market going to give it? So
it's funny, right? Because right now they have a promise of revenue, and the market's like, all right, 2,000 times sales. When they actually have to put up revenue, I wonder how the market thinks of that as well.
exactly. I'm telling you, this is like Silicon Valley with Russ Hanneman. Remember?
Yeah.
It's like, oh, you're not generating any revenue. You're a pure play. It's like Oklo. Oklo is the same thing. Everyone's like, oh my God, the future is nuclear. Everyone is bidding up Oklo. I shouldn't say Oklo. So for some reason, some people say Oklo, and I got used to it. It's Oklo. So, yeah. Here's my question to you. Does it feel like 2021 again with seeing these names running like ASTS, Rocket Lab?
Yeah, but there is more fundamentals than there were in 2020. Like way more fundamentals attached to them.
Mm-hmm.
Like ASTS with the Golden Dome and their Verizon partnership. Like even that is like substantially more than anything that 2021 had in the SPAC days. So
no, I would be careful with that, because there were some companies that I was bullish on during the SPAC bubble, primarily because they had strong counterparties, but they didn't pan out anywhere. Remember, like if you remember, Rivian was backed by Amazon, so they got this huge boost because of that. But where did Rivian go? You know, so I would say just be careful, because the thinking is sound, saying, oh look, Meta is a partner with, who did they just partner with? That's like a really small speculative company, Oklo, right? Oklo. Yeah. So now Oklo just started to rise up, and then, you know, I don't know if this is actually going to pan out to be a real business model. So I don't know.
By the way, thanks to Intel for making me a community member. Nice little negative 10% on this bad boy.
10%. Whoa. What the hell?
I said this as I bought my 100 shares at $3.59. I was like, it's gonna dump, and there you go.
You bought shares?
I bought 100 shares. I took a little gamble. I'm like, maybe it doesn't dump.
Okay, it happens. It happens, man. Yeah, you know, you want to know? Like, I was gonna keep this like a Patreon exclusive thing, but I'll tell you guys a company that everyone should be doing research on. I would actually like to hear in the comment section what you guys think. Have you ever heard of Sprouts Farmers Markets?
Dude, I've heard of these guys. Yeah.
SFM.
They had a really good 2024, I think.
Yeah, they've been getting absolutely demolished over the last year. But I looked at their fundamentals, and they're actually pretty strong. I mean, I think there's a good chance of a solid recovery, like, you know, by 2030, if not forward. So
someone said I used my UPS bonus to buy Intel. You guys are crazy, bro. Oh my goodness.
Yeah. Look at its 5-year chart.
Yeah, 2024. This one's peaked. Yeah, there you go.
Yeah, it kind of just, and the thing is, like, this company, if you look at it like from its fundamentals, right? First, they have no debt on the balance sheet. Okay, they paid off all of their debt. They're generating a lot of operating cash, and they're very disciplined on how they spend their capital. And they've been doing, majority of what they're doing right now is share buybacks. And so the share count has been going down. So they're projected, I project their EPS is probably going to grow maybe 25 to 35% year over year. Now, I would not buy this company at $140 billion. Like, I mean,
$140 billion?
No, 6.8 billion. I'm saying, yeah.
Oh, when it was.
But no, even at its peak, it was like at $12, $13 billion. Like, that was the market peak.
So why'd you say 140 billion?
No, I misspoke. I said I wouldn't buy this at $140 a share, right? Because at that point, there's not a lot of growth ahead of it. But if you think about it, if this thing grows at about 25% EPS for the next 5 years, while it's still gaining market share, it's growing certain segments. It's got pretty high margin revenue, and right now the U.S. consumer is becoming a lot more health focused. You know, if this thing has a potential to slowly creep its way back up. I'm not in the position, by the way, just letting you know I have a position in it. I'm still doing a lot of research on it, and I really want to get that research piece before publishing anything. But from the fundamentals I'm looking at, they seem attractive. You know,
Nvidia, why do you think this one is? I mean, I think I know what you're going to say, but why do you think this one can't break out, but everything else is finding a bid?
I mean, you know who Leah the trader is on Twitter?
Yes, I've heard of her. Yeah.
Yeah. She posted something very interesting today. She said right now memory stocks and metal stocks are all the rage. And so they're almost like acting like oxygen in the room, where they're just sucking capital away from real companies, you know? Yeah. So I think that's what's happening right now. So you're starting to see the rally kind of broaden a little bit, and everyone's kind of like, and that's not, and by the way, it's not just Nvidia. Microsoft is down too.
Dude, what is going on with that? With that one, I genuinely don't understand why.
It's OpenAI, bro. OpenAI became a premium, and then now it's a discount. Everyone is like, yo, Microsoft is gonna get its ass handed to it by this OpenAI partnership. So a lot of people are saying Microsoft bet on the wrong horse. So, you know,
they do own 30% of. I mean, even if they were to sell everything or sell half during the IPO, they're going to make money. They're not going to lose money here.
Yeah, but I think the expectation for Microsoft was up there. I mean, you look at the PE on Microsoft, it's like 35. So there still is a pretty shiny premium to Microsoft, primarily because of its OpenAI partnership. So, you know, people are just saying, maybe I don't want to, like, do the 1 year chart on this thing. Yeah. See,
dude, these companies are spending so much freaking money on AI to get a 1% move. Like, this is wild.
Well, I mean, this is the problem, man. When you buy shit at the peak, you're gonna get hit. At least with Nvidia, Nvidia is massively generating free cash flow, and they'll be utilizing that to buy back shares, and at least for the next 3-4 years, they're looking like they're going to have 60% growth next year. Then I think 35-40% growth the year after that. And the one thing I like about Nvidia is that they are because they're generating so much free cash flow, they're spreading the wealth around everywhere. They're like seeding all sorts of startups. They're seeding all sorts of companies that could theoretically one day be monster returners for Nvidia shareholders. So very similar to Google, in that Google, you know, spent a lot of money on Waymo and SpaceX and all these other little things that now are probably yielded them a much better return than had they just invested that money buying back their own shares, you know? So yeah, I think Nvidia is really trying to build out a strong ecosystem. And if that means that they have to spend some money to do it, they'll do it. But I do think that the market is not giving Nvidia its fair value, considering just how much of the growth is sort of projected in there already. Record numbers all over the place. Should I try for a fourth? Oh my God, fourth term, bro! You're on your third term. You haven't even hit your third yet. I think Biden. I think the senility thing is starting to creep into Trump. He started calling Greenland Iceland. You know, did you see that?
Yeah, I saw that.
He's getting that age. He's not a young guy. You know, I still think he's got more of his brain than Biden did during his last year, but I think he's starting to lose it. You know,
I also don't think he's actually going to go for the third term. I think he's tired.
No, of course not. Of course not. Nah, man, I don't know about it. I don't know about that. He doesn't seem like no one on his team thinks he's tired. Dude is always everywhere, man.
His stamina is remarkable. Like at that
his age.
I don't think he sleeps on these trips.
Dude. At his age, I don't know, man. Dude, I'm 40 and I feel like not getting out of bed most of the time. This guy is out here like, yeah, let me go to Greenland and try to take that shit over.
And then put out these tweets and cause like deal with the pressure of the markets being down 5% and then reversing it. Like I feel like he loves
calling out Jay Powell, calling I think what's his name? Calling people low energy. It's like, bro, you're so low energy. I think that's like the best insult. It's like, oh, bro.
No, the best way to intellectually insult someone is by saying they are mediocre. Like that word, like you're not good, you're not bad, you're mediocre, you're basic. That word I feel like is insulting.
Yeah.
You're trying to insult somebody.
Yeah, he said something to Ken Griffin at one time. Ken Griffin's like, I just kept it moving. I just, printed the tweet and it's hanging on his wall. Now he's going after Jamie Dimon. He's like, yo, I'm coming after you, Jamie.
Job Vaughn, thank you for the $50 super chat. That's very, very kind of you. Thank you for being here. Thank you for the super chat. I'm putting Chris's Twitter in the chat so you guys can follow him there. A couple of people are asking, what do you think about Palantir? I mean, I'll get Chris's thoughts, but again, I'm saying this about Palantir and Hood. They've been really good bets over the past 3 years, but their valuations are now up there. The growth expectations are up there. They can still do well, but they are not the same Hood and Palantir they were even last year. And so for them to even keep their multiple, I think is important versus expand. And the fact that high beta has been running and those two, which are some of the most high beta stocks in the market, are down for the year, shows me the market is moving on to different high beta names. And that's okay. But like them not collapsing 50% matters more to me than them having another 50% year. Chris, any thoughts on those two names?
Dude, the fact that it's holding up as well as it is compared to ServiceNow, compared to Adobe, compared to all the others, like SaaS has been absolutely decimated this year, and it doesn't even look like there's a bottom anywhere. That's the crazy part. So, it's funny. I never thought I'd see SaaS go from growth to value, but that's what's happening to a lot of these. Like Adobe is trading at a value-based valuation, which is insane considering just how much free cash flow they generate. But then again, their top line growth is gone down significantly. So I think that's the major threat that you have to worry about when it comes to Palantir, is that if they can maintain their growth level and they can maintain it for the next 5 years, it's probably fair value. If they can't maintain that growth level, you're going to probably see a drawdown, and look, anyone that says, no, it can't get drawn down by a significant amount, bro, just look at ServiceNow. ServiceNow is doing more revenue than it ever did in its history. All right. And it's still growing at a phenomenal pace. The problem is the rate of the growth has slowed down materially. So the market is just giving it less of a multiple. And that's a normal thing.
Would you buy any of the software names that are beaten up or no?
I believe it or not, I'm actually considering it, especially ServiceNow. The problem is you have to wait until these things really, really bottom out, right? To get you that like oversold level that's going to give you this upward movement. Like their earnings right now, even if they grew their earnings by, let's say 25-30%, this thing is still trading at like a double. Like what's the PE on it? Like 50 something? Scroll down.
ServiceNow. Oh, they have it on Google. It is 77.
Yeah, I mean, it's still expensive in that regard. So this would probably get a lot more attractive, between 25 PE and 35 PE, which means that, under the right circumstances, if it kept moving down and then eventually consolidated at some point, and then it started to grow its earnings at just a normal pace, I think ServiceNow, unless it gets some kind of catalyst. And I think a lot of companies are trying to find those catalysts, like PayPal with its acquisition today. You want to find some growth engines that come around that help you compound your growth back to like 20-30% again. And I think that's the challenge with ServiceNow, in that they've slowed down to 20%. The question is, can they slow down even more? I don't think so. I think if they maintain a 20% growth rate on their top line and then they keep buying back their shares and grow their earnings, there's probably not much left in terms of a bottom for ServiceNow. Adobe, on the other hand, Adobe's got a bigger problem. Adobe's slowing down significantly, but their free cash flow is insane. So I don't know. You have to, with the SaaS names, you got to be.
Think Adobe's interesting, like at all? Like outside of the cash flow, I don't see the AI tailwind for them Not even a little bit. Like Firefly is not that interesting.
I don't know, man. I mean,
I mean, like Nano Banana or Sora or whatever Canva's do. Like, there's so many alternatives for the average person than to sign up to Adobe for AI.
That's a very good point. You know, I think this is one of those challenges that we're all going to have to kind of like work our way through, right? And seeing that how can Adobe innovate themselves? I mean, look, I think of Adobe like I think of Zoom, right? Like everyone still uses Zoom and Zoom generates cash flow, but the day of like exponential growth are kind of like coming to an end. You know,
I
like,
use
Zoom.
I use it too. I pay for it.
Yeah, I pay for it too. Like whenever I have meetings and stuff with people, I still use Zoom. But in terms of like, oh my God, I can't live without Zoom, and Zoom's got this killer next product that's going to revolutionize everything. I don't see one. So
let's end it on the stock draft. Haven't looked at this in a week. I'm at 24%. Matt's at 54. Rock Lab and ASTS helping that. Tanner's at 16. Steve's at 7. You're at 9.
Steve's catching up.
Yeah, Steve was at like -1 at one point. He's up 230% on Micron,
dude. You know it's okay. All right, this is amazing because if you think about it, you don't need to get a lot of companies right.
You don't
to actually do well, right?
Like if people diversify to hedge against one thing going bad, but if you just get a couple right, that's it. You're done. That's it. You're done for the year. Like everyone who invested in SanDisk or Micron, if those names hold, or even if they just sell right now, they're done for the year. They made 40% in a year. They probably triple the S&P.
Exactly. Look at Matt. He got like 3 of them, and because of that, he's up. He's just kicking all of our asses. Like 230% on Rocket Lab, 177% on ASTS. Bro, if the rest of his portfolio all died, he would still probably beat us all. Yeah. SoFi is up 75%. He's got Epsilon, which is a 46%. It just goes to show that you can't ignore high beta names, because if high beta starts running and you're in the right high beta name, bro, you are going to absolutely kill it. Like Epsilon, I think it's less than $1 billion market cap. Rocket Lab, when he started buying it, was like $3 billion market cap. ASTS, I think even now is only like a $10 billion market cap. Actually, it might be more. I don't know.
I know it's like 40. It's like 40 now, I think. But
ASTS is $40 billion market cap?
I'm pretty sure. Let me check. ASTS. Yeah, dude, 42 billion.
Oh shit.
Oh, you were pretty bullish on it at 25 as well.
Yeah, man.
This is not a $5 billion market cap anymore. Like,
wow.
Okay, so so what are you thinking of your port? So Google crushed it, UNH pretty good, Marvell crushed it. Axon, Elf, and Oracle seem like the biggest ones taking a hit. Novo, I think you've come back pretty nicely, but that's still down.
Yeah.
And Lilly and Cisco doing pretty well as well.
I think the bad thing for me for my portfolio is the timing to get in was not good for Novo, because what happened is Novo started to recover and then they kind of fell off a little bit. The GLP-1 story is still ongoing. Like GLP-1, like Novo right now is selling their oral version of their GLP-1s. That's like a higher dose of an existing drug that they have. And so they're starting to recover. So Novo's getting there. Elf got smashed because of tariffs, and China. But I think Elf has a potential to start to kind of recover a little bit. That's my like high beta name that I bet on. It didn't work out very well for me. Oracle, I was bullish on it because of its OpenAI partnership. And now, instead of that partnership being value accretive, it's actually being value destructive because of all the CapEx that they're spending. Take-Two is just like endlessly delaying Grand Theft Auto. Like, come on, guys. What the F, bro?
You literally bought it just for Grand Theft Auto and they keep delaying.
I bought Take-Two just for Grand Theft Auto. And every time they're just like, let's just delay. It's a pain in the ass, but.
All right, folks, there we go. Thank you, Kris, for joining once again. I'll put Chris's Twitter in the chat. He will be at the New York meetup in a week. I will put the meetup link in the chat as well. We have about 25 spots left. So if you want to make a trip out to New York, you can
how many people are going to be at this thing?
Dude, we're pushing 350 at this point.
350 people?
Yeah, it's going to be a lot.
Jesus. All right. Well, that'll be interesting.
But I told Steve, Steve, Matt, you're going to have like an army of people around you because they've seen you online, but when you see someone in person,
yeah,
it's a difference and it's fun. So I think it'll be really cool. This is the only meetup this year, I think, where all of Tanner is going to be there as well. This is the only meetup I think all of us.
You convinced Tanner to get out of Canada and come? That's good.
He messaged me one day. He said, "Yo, I'm coming through." I said, "All right, bet. Awesome."
That's good.
Erwin's going to be there.
Yeah, Amit, the other Amit's going to be there too. I spoke to him a
Really?
couple of days ago. Yeah, Danger will be there.
You didn't tell me that.
Yeah.
Oh, shit.
I don't know if it was supposed to be a surprise. Well, I guess it's not a surprise anymore.
Not surprising. Okay, that's awesome. That's great.
Yeah. I think Adam will probably come through, right?
Yeah,
So it'll
Adam
be cool. Yeah.
By the way, shout out to Myra. She just sent me this. This is the most adorable thing ever. Look at that. There's a little baby
nice.
watching us on the clothes.
That's the Uber driver, if I remember, right? She used to drive Uber.
I think she used to drive Uber as
Myra
well.
Singh. Myra Singh. I remember her. Yeah.
Yeah, she was on the Finance Chunky days as well. That's so cool. I love when I see pictures of how people are watching the show, because it's always cool to see how people view us. Which is why being there in open or being there in person also just makes it more fun. Ray's going to be there. Michelle. Ray says we're taking shots of milk. Good. Dude, do you
this is
anymore or no?
I don't drink.
So you're not going to drink at the meetup?
Maybe I'll take a shot or two just to, just for shits and giggles. But I don't drink anymore. I'm good. It's interesting because this is like the Amit verse. Like all these other side channels, everyone is just like stream hopping from one to, and then me and Steve were talking. We're like, when Amit goes on, it just sucks all the viewers out and just goes to his thing, right? So it's like none of us want to be on when you're on because it's like, there goes the crowd.
Yeah, but what makes my stream special is that you guys come on to the show, right, and offer your value and expertise. It's been really cool, dude. The past couple of years have been really cool. Kris actually knows Kris is the only person that knows the guest for Friday or for the podcast, and it's a big guest, right?
It's pretty cool, dude. It's really cool. I'm actually proud of you for getting that because that kind of lends you into this zone of credibility of, hey, you know what? There's people that are on another level willing to come on and talk and share their thoughts on yours, and just goes to show that you've built a very strong brand that people feel comfortable being on. So keep it up.
Dude, the craziest thing is, I don't know if I told you, he reached out to me.
Oh, that's cool.
On LinkedIn, he reached out to me, and I was like, because I was getting ready to reach out to him. He was the number one guest I wanted to have to start off the year. Yeah. And then a week ago, he reached out to me and we called each other. And I think people will enjoy it. It'll be fun. And we'll definitely get Kris on the podcast one day when he stays over in New York, and we'll talk to him about his life.
Scott Bessent. Dude, Trump. Hey, don't rule it out. Don't rule it out. You never know, man.
Dude,
Trump was on the
I'm like, Bessent, what was it like when you punched Elon in the face? Well, I didn't. Well, he definitely did it. We know he did it.
Yeah. Vlad or Chris Camillo. Now I know who it is. All right.
It's not Vlad. It's not Chris Camillo. We'll get them on eventually when they're in New York, but I think people will enjoy it.
Yep.
All right, folks. Thank you, UPS CEO.
I'll be honest. Gosh. I think being the CEO of UPS, that is the greatest insider knowledge person on the planet. Dude, you know where everything is moving. Dude. Look, if this stock market thing doesn't work out, bro.
This is getting great, bro. We make a joke on the stream and then people just turn it into.
Dude, this is awesome, man. No, come on, you gotta love it. I love this.
No, I love it. It's amazing, but there's a creativity on this. Is
oh, dude, the brick background is actually the UPS warehouse. That's amazing.
Oh shit,
that's amazing.
Really good. That was a good prompt.
That's a really good prompt. Everyone thinks you're live streaming from your apartment. You're live streaming from UPS, your UPS warehouse. Oh man, it just does this worry you on what's gonna happen 5 years from now? If AI is this good right now, what is it gonna be like 5 years from now?
I really do. I mean, I've seen so many Instagram influencers that are just AI that have started to pop up on my feed. I'm like, and you kind of know they're AI, but you take a look and you're like, dude, if I really didn't look, I would think this is a real person. And so,
Dude,
yeah.
there's this girl that was dancing like in a club that was like a sweaty, and I thought it was a real person. Bro, it's an AI. I was like, what the hell is this? Like, and the problem is there's a lot of like AI slop that's being generated on X, and it's sort of weird because like some people are actually falling into it and they're actually believing it, and it's
my dad believes a couple AI videos like every week and asks me about it. I'm like, Dad, that's not real. It's like AI news stuff. Like,
you got Indian people in general, like old Indian people are easy to trick. My dad will send me like, oh, did you know that this happened? And I was like, Dad, that's AI. It's not real, man. Like, stop. Because India, I don't know if people in the chat know this, but in India, the way people like news disseminates is through WhatsApp.
Yes.
Like that's like the preferred platform of truth in India, but most of the truth is actually false, you know? So they all share like, dude, Instagram is the word. My mom and dad got into a fight the other day because my dad's algorithm now has a bunch of girls on it. And my mom's like, what are you doing? Why are you watching? And my dad's like, it's not me. It's just the algorithm. Like it's Zuckerberg. And my mom doesn't believe it. And my mom's like, you clicked on something. Like
I mean, technically he did.
Show you. No, he didn't. He didn't. Well, maybe he just
he definitely did, bro.
Maybe he didn't flip through fast enough, right? So
yes.
So my mom's like, goddamn Rundies on here on Instagram, like, and I'm like, Rundies, and I remember like, what's the Hindi word? Like Rundies, like slut / whores, and I'm like, so I had to calm my mom down. I was like, Mom, he's like 70 something years old, you know. If he's watching some girl, who cares at this point, man? She's just like, no, it's embarrassing. I'm like, I get it, but
the algo is getting really good, dude. Like even on X, like you fall into a rabbit hole of certain type. Now that's it could get very dangerous if you get into a certain type of content. You get more of it, but it keeps you engaged.
You remember when I had my Korean lady thing? Remember everything that I got was like just a bunch of Korean influencers, like Korean girls. Now all of them are gone, and now I'm getting all sorts of like calling me a pajit. Because I think that's what it is now. Like I'm getting all the racist H1B trolling, and I'm like, bro, I'm not even H1B, but apparently that's what my algorithm is. And I'm just feeling. Okay, I'm gonna say something. Do you have a minute? All right. I honestly feel like I'm being more radicalized by X in the wrong way. I never used to judge people based on color and that. I tried to be very neutral, but like now, I'm starting to see like when I was at Waffle House the other day, and there was this nice family. They were white, whatever. Me and my wife were waiting for a table at Waffle House, and we got there first. And there was another couple that were leaving, and this guy looked and he pointed to the open table. And before I would just be like, "Hey, excuse me, sir, I'm gonna sit there." Me and my wife. But for some reason, like internally, I was like, "No, if I don't stand my ground, he's gonna think I'm some weak Indian dude." So I just came. I was like, "That's my spot," and I just sat down and I was like, I'm not this person, you know, but at the same time, what it is that when you continuously come at a person, you kind of feel the need to overdo things to kind of like challenge the narrative. I don't know how to explain it.
I'm sure a lot of people relate to that. A lot of people, these algos are incredibly integral in radicalizing, and they keep you engaged. That's why they keep sharing you the same content, and then you keep watching. And then and this is, I don't know what's the solution to this, because this is social media on steroids now, because it's all artificially intelligent.
Like, the part that gets me is that I negatively judged this person before they had a chance to negatively judge me. Like, I'm pretty sure he doesn't give a shit about H1Bs and Indian people. Like, it's probably not him. But for some reason, the first thought that came to mind was, I bet you that guy thinks of me in a lesser.
Yeah.
Like, I shouldn't have felt that way, right? But that's what my brain is. And it's something that I'm like, I told my wife, I was like, man, maybe I need to like decompress out of social media. Cause like not every person is a bad person. Not everyone's out to get you. Not everyone, like most people are just normal people, you know, like I don't need to worry about every time I go into a store, like, am I being judged right now? You know, I told her, I said, this is going to sound messed up, but I said, I understand what Black people go through now, where literally everything comes off as racist. It feels like that because it's only happening to you.
No,
you know, and it's probably not, but it's a pretty shitty feeling.
And I don't think there's really going to be a solution to that anytime soon because these companies are motivated. Like literally Sam Altman's talking about integrating erotica into OpenAI because he knows it's going to be engaging. He knows people are going to pay a premium on it. Yeah. And as a result, that's going to be something that people care about more. Siege, thank you for the $20 super chat. Sartre once said, man is condemned to be in the markets.
Yeah. So it says right there, someone said victimhood mentality. The problem is I didn't have victimhood mentality. It wasn't a part of my level of thinking, not forever. And now it's starting to kind of like creep in. So that's the thing. Is social media the reason why I have victimhood mentality? Yeah.
I mean, the only way to hedge against that really is to just get out of those algos. It's tough, but you got to.
I started blocking like you'd go to the not interested thing. So every time I'm on there and I see like people saying shit about like Indian people, I want to respond and I want to be like, no, stop. Like, we're not all here to take your jobs and, steal from you and, do all this shit. But at the same time, the more I engage, the more my algo becomes that.
Yeah. Well, see, that's the thing. I never respond to any of that stuff on X because also I'm like, bro, I just don't care. Like, if this person's going to think all Indian people are XYZ or what, like, my response is not going to change it. Me bringing awareness to it from my perspective is not going to affect it. It's only going to generate more attention. Second of all, I got money to make. Like, like genuinely, I don't get wrapped up in this stuff. This is the same rant I have on politics. I don't care about politics. I have some political opinions here or there. And even when I say those opinions, half the chat gets mad because everyone's so polarized. But I don't care. Like, if someone's going to be racist, okay, be racist. But I'm focusing on this stuff. And that's how I move, around my day. But I can understand people get wrapped up into the other.
Yeah. Like I said, you want to respond, you want to, confront things, you want to try to educate people a little bit. And the reason why you want to do it is because, you want to make the world a better place, but some people are, and I suspect, honestly, Amit, I don't think most of these people are real.
No,
I think a lot of this is just social engineering by bot farms from 100%. Other places. The question is, what is, and it clashes against the idea of free speech. But at some point, if someone is abusing free speech to come at you, like, how does that work? Like, should we just allow it forever? Where it's radicalizing people? I don't know. It's a weird dynamic. It's a really weird dynamic.
Yeah, and it takes a lot of energy to like go correct someone about their incorrect view on a certain race of people. I'm like, dude, I don't have the time to try to correct this person's thought. Like, they're already stuck in such a rabbit hole of things they're getting fed by my one comment is not going to make it. So I'm like, I just don't get that person has a personal problem, and hopefully one day it's resolved. But I'm not going to spend the energy to fight back again. I just don't care enough. I have to move on.
Yeah. It's interesting. Yep. All right, brother.
For us folks, for those that are in the Intel community now, welcome. We are here. That's why it was only it was 100 shares, bro. It was $5,000. It was whatever. We're down $500, but we're part of the community now. So
what the F, man? Jeez.
Dude, it was actually a good earnings. There's nothing they're saying is bad. It's just their guidance is a little bit lower because of supply, not demand. And
when it comes to earnings, guys, everyone in the chat, look at the expectations going into earnings, because if their expectations are way too high, you're almost likely to see, like, there's a higher probability of getting a pullback, mainly because it's really hard to live up to expectations, right?
No, but they beat expectations by 88%. It's the guidance.
Okay. Damn. Okay.
It was such a gamble for me, but then I look at the earnings. I'm like, this was a great earnings, but still, there's always this is why earnings is such a stupid thing to play every. Like, I was thinking of Netflix earnings. I didn't play it. Netflix dumps 10%. Like, you just can't. Like, that's why I didn't play Micron at 220, but Micron ended up going to 300. So it's so random, but it's also just like,
Here's the question: Are you going to buy the dip, knowing that the earnings were strong?
We'll see. If it actually gaps down to like the low 40s tomorrow, then yeah, probably. If it stays in this 48 to 50 range, then inevitably it probably comes back.
Yeah. All right, brother, man. I'll see you later. Have a good one.
All right, Kris. Thanks for being on. We'll catch you next time.
Yep. Enjoy your shift at FedEx.
Yeah,
I'll see you.
I appreciate it. Did UPS stock go up today? We got to play UPS earnings, bro. Now I have to play we have to buy at least one share before freaking UPS earnings. They're showing multiple supply shortages. Yeah, I'm getting a couple quotes from the call. The call seems to have gone fine, but this is what it is to gamble. Literally like putting your money on black or red when you're going into this stuff. The good thing is it's a stock, and at the end of the day, stocks can come back to life. But also, this is why you don't buy like 5,000 shares before earnings, because you just have no freaking clue. You have no freaking clue sometimes how this thing. I mean, Nvidia. Who's buying more Nvidia right before earnings? Like realistically, Nvidia's gonna have their best quarter in history. I can't imagine that stock not going to $200 on earnings. I really can't imagine. But then again, what if there's one little thing Jensen says, just like Intel said, one little thing about Q1 demand or Q1 supply that's going to create a glut until Q2, which is actually bullish, but nonetheless, it's going to hurt Q1 numbers. What if Jensen says something like that? I don't think he will, but what if he's like, well, there's a memory issue and this and that, even though there's probably not for NVIDIA because they have so much access to memory. I don't know. And then NVIDIA drops 10%. It's hard to kind of see this play out in the way we want it to. When do we double down on Hood? I don't want to touch Hood until we at least see 90 or below. I think buying Hood right here is just like, I don't know what the purpose is. The stock's down from 120 to 106. Growth expectations are much higher. They've lost all their crypto mojo because crypto sucks right now. Like the bull case on Hood and buying it at these levels is not the same bull case as last year. Like when it got to 100 for the first time last year and I was buying into that strength, there was actually a bigger bull case than what there is right now, even though the company is better. And a lot of that has to do with crypto getting hit. I've never done that because I buy and hold, but if someone wants to trade NVIDIA, you buy TSM before earnings, sell before NVIDIA earnings. Yeah, there's a lot of proxies that you can buy to play it as well. I'm buying a couple NVIDIA before earnings. UPS should be in your 401k. Dude, it sucks for Hood too, because I love it. I just interviewed one of the chief product officers at Hood yesterday. That interview will be out probably next week. And he was awesome. And so I love the company so much, but it's just like the stock right now is in a situation where they need to really show growth outside of the market dynamics. And that's going to take time for them to build out. And the thing about Vlad is I don't think Vlad literally cares about the stock going up or down. Like I really don't. I think he's happy that the stock has done very well, but I don't think he's like the stock has to go to freaking 150 this year. Like he got the stock from 6 to 100. Same thing with Zuck. Zuck's got the stock from 88 to basically 700. I don't think Zuck's like, I have to get the stock to go up. Not because they're not motivated to see the stock go higher, but also because they're just like, dude, we've delivered phenomenal returns. Like you're not going to sit here and say Vlad sucks or Zuck sucks for what they've done over the past couple of years. So it makes you think twice buying at these levels of just like, are they okay with taking a little bit of a breather for a while to gear up the next decade of earnings versus the next quarter of earnings before it actually ends up taking off again? I have cash buying Meta and Nebius, but I think Hood will continue to do well. IBKR just proved these companies have more growth in 2026. Yeah, IBKR's operating margins were unbelievable, dude. 73% or something. Like those Hood's at like 40. I mean, I don't know if Hood gets to 70% by the end of this year. They're paying a lot of money to generate asset transfers, so that's probably what's going to stop it from getting that high. But again, a lot of Hood's revenue is freaking crypto. Not IBKR doesn't really care about crypto. And so when Hood loses crypto, which crypto volumes have been suppressed over the past 3 months, if that continues, I mean, imagine the whole year of Bitcoin stuck at 89 or barely goes up to 100, then comes back to 80. Like if it's in a range, you're just not going to have the volatility that's needed for crypto to be a big segment of the business. Yeah, and then you have Massachusetts, which I still can't say their name correctly, freaking trying to ban the prediction markets. Like that doesn't help either. And that could be a bigger issue for them. But if we do get a crazy Hood dip, I mean, like crazy, like if we see like $60 or something, I mean, I am buying that dip heavy because that's just like, all right, generational long. And you kind of just buy. SMCI right there up a little bit after hours. Microsoft as well. Up a little bit. What are we feeling about Oscar right now? Well, the subsidies still have to get extended for this to me. Like this was at almost $18 last week. I had no idea why it was at $18. The subsidies have not passed the Senate. I don't get why people were excited that it passed the House. There's 2 branches of government in this country. the House and the Senate. Or at least two parts of Congress, I should say. You got to get through both for something to be real. Or Trump has to sign an executive order. And Trump's not signing an executive order on subsidies. So if the Senate doesn't pass it, then this thing's not necessarily going back to the moon. Amid sounding like Steve on Hood. The difference is I bought Hood at 8. Steve didn't. So I feel like I understand this company better than a lot of people. And right now, I mean, this is why I hedged it in December. It's like there's very high expectations. You have to be reasonable at some point. If the expectations are this high and they can't deliver, then they can't deliver. It's okay. And I'm not going to blame the company, but it's not their fault, given how market oriented they are. If anything, if the share gets price gets hit, they're going to buy back a ton of stock. They have $1 billion they can use to buy back stock. But they do have an aggressive multiple. And so does Palantir. The same thing with Palantir's got to put up really good guidance. They have a very aggressive multiple. The one thing I think that's helping Palantir and helping them keep this multiple so far is that everything else in SaaS is dead. And Palantir is the one name that actually has growth. But again, the qualitative story around Palantir and Hood, that story is played out, right? That story that was such an discovered, underdeveloped story, that played out over the past 2 years. That story is not the same story anymore. Because now they've been discovered. Now they've been given a massive multiple. And so now I think them keeping their multiple matters the most. Yeah, I think Zeta can outperform really well this year. I mean, they don't have a discovered story. Now their moat might not be as good as a lot of the other SaaS companies, but they at least have the growth. Which is what matters. Do you think Zeta's down because of OpenAI? I don't know enough about the OpenAI partnership, but yes, theoretically, OpenAI introducing ads could have been the headline that dropped down Zeta. Although I don't think that really matters. I think that actually bolsters Zeta's partnership with OpenAI on first-party data. But I don't know if that's going to be the case. What are you worried about in 2026? I'm bullish for 2026. I've reiterated that multiple times. In fact, the video yesterday, or the video from 2 days ago when the whole Trump Greenland thing came out, there's three, I don't want to have to keep going over, but there's three basic reasons I'm bullish for 2026. The Fed is cutting, AI is increasing earnings, and then Trump doesn't want the stock market to fall. However, that does not mean that all the names that worked over the past couple of years are going to work again. And I think it's very naive to just be like, just because a name worked for 3 years means it's going to work again. Like, no, if a name worked for 3 years, it might not work for the fourth year. I mean, Bloom Energy didn't work for the past couple of years. Bloom Energy is up 50% this year. This is a new name that's worked. In that Substack article I did about different thematics, nuclear, drone, quantum, energy, aerospace, defense, these are the name memory. These are the names that are up this year. NVIDIA's been dog shit this year. Micron and SanDisk have been amazing. Maybe NVIDIA doesn't work this year. I don't know. I hope it does. I think it will because the growth is undeniable. But so far, if you bought Micron this year instead of NVIDIA, you've done way better. Because NVIDIA's worked for the past 3 years. Like at a very pristine level. And at some point, sometimes things take a breather. Now, we're only 22 days into the year, so there's no need to overreact about year-to-date performance on these names. But it goes to show some of these names might not just easily repeat as strongly as they did last year. Like Amcor. Yeah, Amcor's up freaking 25% this year. Massively outperforming a lot of the semi names, including NVIDIA. And that doesn't mean Amcor is a better company than NVIDIA. It just means, the stock pickers market thesis continues to be intact, which is great for retail because retail is, I mean, if you guys are on X, the amount of people on X that tweet about different stocks and ideas and concepts and the diversification of knowledge that's out there, I mean, that is allowing people to find random names that are not penny stocks or junk stocks. They're like real names that have a thesis. They just haven't been discovered. But NVIDIA has been discovered. Now, it's easier to sleep at night buying NVIDIA than Amcor, 100%. Even though I think Amcor is relatively safe at its multiple, but like it's way easier to sleep with NVIDIA. But it doesn't mean NVIDIA is going to perform the way it's performed. Socrates once said, the only thing I know is that no one knows where the top is. Siege, you need to make a website of like AI stock market philosophy quotes. Or you need to make an X account and just put those out there. Because that's exactly what Socrates would say. That's true. The only thing I know is that no one knows where the top is. Thoughts on AMD? Dude, we saw it at 200 a week ago. I almost pulled the trigger, but I didn't. I just feel like I have enough AI chip exposure, but I like it. I mean, I don't know if I'd buy it here after the run, but does it deserve an increased multiple? Yeah, they're going to grow 35% for the next 5 years. Like, Street's not crazy to price in that growth for the multiple. Is Substack free? Yes, Substack is free. You do not have to pay for it. I'll put it in the chat. It will always be free. So you can follow that there. It's free. Are you worried about Hood, NVIDIA, Palantir being opportunity cost in your portfolio? Not really, because at the end of the day, I think those three names are cornerstones of the portfolio, and the cost bases on them and the ability for them to like just be stuck and not do anything doesn't really change much for the portfolio. Now, they led the portfolio last year. They might not be leading the portfolio this year. I don't think that necessarily means get out of them, but once you get in early, this is what I was saying about Tesla. Like for the people that got into Tesla in 2019, I don't understand why you would sell this thing. Like the level of, I think the only stock in the market that has the type of 20, 30, 40 trillion dollar potential, it's freaking Tesla. And if you have a cost basis under like $40 on this thing, you just hold on for the ride. And if it gets cut in half, it's like, okay, so what? You're still at 5x. So yeah, some of these things I think you just keep. You don't have to worry too much about getting rid of them. Why'd you buy Intel but not AMD? I gambled today. We gambled. We played blackjack on Intel. In fact, as I'm down $670, that's almost exactly how much I was down 2 weeks ago in Vegas. It was about $600. So that's why I don't play earnings, bro. It makes it more fun though on the stream. Like it makes it really fun, especially if we win. It makes it really, but like you just never freaking know with earnings ever. Especially when a stock's already up 50% year. Like it's stupid playing it, but it is what it is. That's the point of gambling. You knew it was going down. That's the worst thing. But see, I was too confident saying it was going down. If it went up as I'm saying it's going down and I didn't buy, I'd be even more. Honestly, if Intel went to 60 after 10 minutes of me saying we all know it's going to drop, right? And I chose not to buy, I'd be more pissed off than bag holding a negative $600 move on Intel. So we had to hedge against that pain. And that's what we had to do. Is that it? Is that all we got? Do we have anything else? Bro never learned from Vegas. Did not learn from Vegas. I don't think there was any crazy headlines after. I showed you guys that retail stat. We watched Elon today at the thing. Again, Tesla without FSD. That was a big deal today, or without supervision. Elon had a bunch of quotes this morning. We talked about that. It's called earnings roulette. Exactly. Okay, here's the more important question. What do we have for earnings next week? What are we playing roulette on next week? How do we not learn our lesson? Tesla, Microsoft, Meta, IBM, Apple, Visa, SanDisk. Bro, SanDisk is going to get crazy next week. I don't think I have the heart to play SanDisk. It's up 100% this year. I don't think I could play that. But that shit's probably going higher. That one's probably going. Then you have Tesla, Microsoft, Meta. I don't know, dude. I played Microsoft last time. That didn't work out. I have Tesla and Meta. I'm just going to hold those. Even though I feel like Microsoft's the most depressed out of all of them, and that one should work. But time will tell. What about a rant? There's nothing to rant about. Rant about UPS. Dude, there was a couple of you guys who actually work at UPS that messaged me last night. You're like, bro, I actually listen to you all day while I'm delivering packages. Very, very humbled by that. It's super, super cool. A couple people from Amazon as well that messaged me about that. But I guess I look like a UPS driver now. Are you buying more Grab? I have enough Grab. I'm not buying it. Once again, very simple thesis that I have on it, and I'm holding. That's it. Like, I know it's boring. I know it's not fun, not sexy, but I'm holding. I have my thesis, and that's it. Either it plays out or it doesn't. There's many, many parts to this thesis. Either it moves or it doesn't. I do think it's being artificially held down. I think it makes no sense being at these levels. But that's okay. That's what I got. But again, you know, we talked about this in the beginning of the year. You don't have to be in a name if you think it's not working or it's boring. Like, there are plenty of names I will own for a long time that don't work for a while. I've literally been through this with Palantir and Hood, and that's okay. Maybe it doesn't work for a long time, but I'm not going to YOLO into Micron and take all that money out, even if Micron does bad. Like, those are different choices that I have to make, you know? Some of those things I can, some of those things I can't. Silver's at 97, dude. Goodness freaking gracious. Silver. Gold's going to push 5,000. This was the one I wish I cared about more, the commodities. Commodity super cycle was just too freaking obvious in hindsight now, but man, has this one worked out. But it's scary now to bet on these names. Just like it's scary to bet on memory. Like, is it easy to just get into these? Basically, I'm saying not to chase. Yeah, but sometimes chasing does work. Like today, it didn't work on Intel, but like Micron on freaking 224. When I was doing earnings with Sam, and that was up 80% that year. That one went up another, basically what, 60%? Like sometimes chasing works, but you also have to be ready for the gamble of chasing. Grab either works, or I'll be joining you on the UPS shift. Yes, gold has outperformed the S&P last 10 years. Do you have Indian stocks in your portfolio? No. Oh, the futures are out? Let me see. India is struggling right now in a variety of different ways. Yeah, futures are flat. Nothing. I mean, they're red, but nothing too crazy. Let me ask a question for people here in the chat. Let me actually do a poll on this because I'm curious. Let's see what people answer to this. Okay. By the way, 56% of you guys said no, you're not heavy meta. So we have about 30% of the chat that's heavy meta. How many, or do you actively trade per week? Or do you actively trade stocks? And we'll do per day, per week, or per month. AKA, do you take a trade, whether it's a day trade, a weekly trade, you'll buy something on Monday, sell it on Friday, or like a 1 month option or something like that? How many people trade often? I'm curious. I should have had a never option, but if it's never, then just don't answer the thing. If it's never, then that just means you don't trade. Actually, let me do it again. I should put the never. That would give a much more holistic understanding of this. Okay, let's do it again. Okay, so do you actively trade? Daily, weekly, monthly? I don't trade. Because I've been talking to a lot more people that watch the channel, and a bunch of them have told me they trade often while watching the stream. Like the stream is actually their source of news to trade, which is fair because obviously to trade, you need news updates constantly. Okay, 34% say I don't trade. It's a decent, I mean, that's 60% of people do, and 23% are doing daily, 22% are doing weekly. Okay, so that's still a decent amount of people that trade. You're on every day and I trade watching you. The day you don't open, the day I don't do well. Yeah, trading. I for sure use the stream to trade. You know, trading is. I feel like trading gets a bad rap because everyone says like I'm an investor, not a trader, yada yada. But I don't know. I think trading is not that crazy of an idea if you have a system on understanding how to trade. I guess you could say I've been trading options over the past couple of years, mainly through an option selling perspective. But there are people that legit buy 1,000 shares of Oscar at 15.40 and sell 1,000 shares of Oscar at 15.69 and pocket those 29 cents a share times $1,000. That's $290, right? And so like I understand why people do that, and the question becomes like, is it degenerate? And I'm like, I don't know. I don't think it necessarily has to be degenerate. It depends on like your approach to trading stocks. It depends on your ability to do some level of basic TA, about your risk management, your ability to have a stop loss, entry, exit, all that stuff. But I also think it's a more active. I mean, Robinhood's entire. I was talking to the Robinhood guy last night. He's like, we quite frankly have built our entire platform for the active trader over the past year and a half. Like they really are focused on incentivizing, and they have a big work ahead of them to take down TradingView, which is like the absolute leader when it comes to this stuff. But they're trying. They're trying to get a lot more people. It's not degen, but a lot of degens like to be flex trading. Yeah, and I think you can be a long-term investor and have your like long names that you just don't do anything with and let them compound. And then you can also have money on the side that you trade with. And I don't think that's too crazy. But obviously it requires being focused, looking at the chart, staring at candlesticks. Like it is really like you got to be locked into it sometimes in order for it to actually play out. Yeah, you also have to deal with terrible. But Robinhood also has bad fills. I mean, that's just like on it. Like I tried defending it a year ago, but when you look into Robinhood, unless you set a limit order, Robinhood does not have the best fills, and it is what it is. Like they need to get better at that. I mean, there's people that have literally left the platform just because they save more money, even on paying the commissions, because the fucking fills are so like wide for no reason. Like that stuff really has to help them for active traders. I'm more of an investor than trader, but there are many ways to pay the market. That's fair. I think a lot of people think about that as well. All right, I think we're done. Is that it for the day? I don't think we have anything else crazy going on. There's a lot of day trading YouTubers. Yeah, dude, there's a lot of day trading YouTubers who have like live streams just for day trading. And some people really, really do love doing it. Do you like Pfizer and Enphase? Enphase is getting a lot of attention. I need to look into it. Moderna is up a lot this year as well, which is why I think Pfizer has been catching a bid. Is Pfizer up this year? Moderna is up like crazy. I mean, that one came out of nowhere. I guess their pipeline is higher. Pfizer's up 3%. Okay, so I think people are using this as a copycat trade for Moderna, but that one's not necessarily moving higher. All right, that is it. That is it for me. Thank you all for being here. We'll have a daily recap in an hour or two. So that will be out. Tomorrow's Friday. We'll have the market open, market closed. I don't think anything else crazy is happening tomorrow. This Greenland stuff ultimately has been resolved. My UPS shift is starting soon, so I need to cut the stream. Would you let your Tesla become a robotaxi? No, I don't want to do that, dude. I want my car to be my car. But I'm sure there's plenty of people that will. Also, like how much actual money would I get paid to let my car run around? I would want to see the unique, especially because they're trying to get the mileage costs to be really cheap, right? So would it be worth it to just let the Tesla be out there? Dude, this UPS thing. You guys got what you wanted. You wanted a new joke. You couldn't make fun of the beard anymore because everyone told me to shave it. I shaved it. Now everyone's telling me to grow it back. So that one doesn't work anymore. That's a wash. now you need a new one. And I guess you got this UPS thing. That's your newest one. When are you getting married? Dude, I have no idea. I have no idea. Hopefully one day. I do want to get married by like, I don't know, my mid-30s, early 30s. But see, I say that. I'm approaching early 30s. I'm 28. So I feel like if you want to get married by 32, you kind of like got to do that soon. But I don't know. Davis, get out of here, bro. Fucking annoying. Puts his hand up. Absolutely annoying. Do you have FSD? Yes, I have FSD. Pay $100 a month for that. Wow, Amcor falling 3% after hours. Maybe falling with Intel. Maybe falling. Amcor and Intel have started to trade kind of closely together. All right. I think that's it. That's it for me. Thank you, everybody, for being here. Appreciate it. Show the UPS video one more time. I feel like you guys are going to make even more of these freaking UPS videos. It is funny, though. It is really funny. Like, I've watched it too many times at this point. Okay, here it is. The fact that the brick wall turns into the UPS building, that's what makes it even better. All right, that's what we got. Thank you, everybody. Daily recap out in a couple hours. I will see you guys for the market open. I don't think we have anything too crazy tomorrow. No earnings. Next week is going to be wild. FOMC, big tech earnings officially began. And then we will keep going from there. Thank you, everybody. Appreciate it. See you guys tomorrow on the market open. Bye, everybody.